Start streaming. I wonder if we could change it to EMAs. Pretty straightforward. So how does the RSI play into this one? Because I'm not seeing it. Hey, good morning. PHH is moving. Nice. PTix? I don't remember that one. I vaguely remember PHH. I'm getting set up still, so hang on. We'll see how it goes today with the stream. I probably won't do more than a couple hours, so we'll see. Good to hear you. Hey, Maize and Blue too. I mean, you can trade whatever you want to trade, Jason. I can't tell you what you should or shouldn't trade. I can look at it, but that's as much as I can do. You know, I am doing a lot to try to remember and kind of beef up on my... it's been a long couple of years. Not sure why this one's on here. And one of the things that, we get into these patterns of looking at certain things, and you kind of just don't do other stuff, You stop thinking about everything. I've always tried to be as holistic as I possibly can in my approach to the market, using just basic strength indicators and stuff like that, and EMAs and all that junk. We look at EMAs pretty regularly. We look at RSI pretty much on every chart. Just a really simple indicator of like possible buy and sell zones. Probably one of the most effective indicators if you just look at anytime it's oversold in certain areas, for like AMC, for example. It's basically like one of the simplest and easiest ways to trade. It's not always going to yield like perfect results, but if you were trading and you were doing day trades here from like an oversold to basically overbought, this would have been very effective, and just using like a simple channel. We get a lot of crap for whatever, on AMC, people want it to just go to the moon, but it is a very tradable stock. I think a lot of people think it's not, and they think it's like an enigma, but it's really not that complex. If you trade this on like a 4-hour basis and you're using like common sense, like you're watching things like trend lines, as it goes, you're going to get pretty good entries and exits. And even if you don't want to trade, this is a 60% move. People talk about, again, like that this is some kind of like really impossible to trade thing, but it's more about, I think, the idea of the squeeze that's bothering people and not seeing like what they want to see in that momentum. One that I'm eyeballing right now that I think is actually in a really potentially very good setup for a swing trade, like a big swing trade, is actually Tesla. And it's a very volatile stock with a lot of strong opinions. And I follow it, and I don't always trade it. Okay, so just so I'm clear, Like the last time I really traded Tesla was back here in this run up after April. I didn't really touch it after too long. I think I got out pretty early, maybe in like the 300s. And then in this area, I tried to trade like once and I was like, man, it didn't really work out. I think I scratched or something. And that was kind of the end of it. And I've been watching it. It's just kind of going sideways. Again, easy to trade if you want to trade the channel. Currently, it's at the bottom of the channel. It's got an RSI divergence on the hourly. It's almost oversold, but it didn't quite get there. That's a little bit odd. And then on the 4 hour, it did not get oversold. I was just looking at that. It's been rising, kind of in line with this wedge. It did break through the wedge, but if it has a reversal here, and I've done this measurement, I spent a lot of time last week looking at it, and I did this measurement just to make sure that it was a decent measurement, and I did a lot. It doesn't look like a lot. It looks like I just kind of squiggled some lines up here because I deleted a lot of my line work. But this actually would be a highly efficient way to get back up to all-time highs, but it would take a little while. It'd take till October, but it's certainly possible. And not only that, but it follows through with like Fibonacci's and rotations and all this other crap. So the only problem with this approach, I suppose, is that it hasn't yet gotten back to being oversold on like a 4 hour time frame. I do think, though, that the last time it was oversold, which is down here at 280, that's kind of been the area that I'm looking at for like a potential dip, because I can't really imagine, like if this whole point of this was to distribute, I could see why, but it hasn't gotten overbought. It's like they haven't really, no one's pushed it yet to the upside. So there's no strength test to the upside per se, except for these initial pushes. And again, it's wedging, so it's a consolidation. And then I'm wondering if they're going to do one right now. And I was kind of eyeballing it the other day, looking at the different setups. And I was like, I flipped the chart. It made a huge difference. Let me get this weird indicator off here. I flipped the chart. It made a huge difference when looking at this, because sometimes when I'm looking at stuff, I'm so used to seeing things from like a negative perspective because of because of AMC and how much time I've spent like looking at that chart. I can't, it's hard for me to see things from like a positive perspective. So I'm so used to seeing things in like distribution that, I mean, it's just the 99 times out of 100 on AMC, you're in a distribution. I mean, and yeah, there's micro versus macro. Obviously, we were just talking about how it's very tradable because it hits a bottom and it goes to the top. Okay, that is very tradable. But then when you look at the big picture, it's all downside over the last 3 years for the most part. And we're in a consolidating bottom, I think. And we are going to, in my opinion, take off and head towards eventually 20, but probably first steps are gonna be like $7 to $10. But like I looked at Tesla upside down and I was like, really, if it breaks, if you look at this in the upside down land here, this is a divergence that's kind of saying, yeah, it might drop. And if it dropped here back beneath 315, again, I'm saying beneath, I would be looking at this like I would look at like a distribution on AMC in the upside down land. This would be dumping the other way. So I'd be like, yeah, that's a pretty clear sign. And the only other place it would maybe go on an up thrust here, if this is like a 1, 2, 3, 4 setup, then it's already got 4 in there. And the only thing I might expect here at the end, like it's basically done. It already came above the top right here. So the only problem that you would run into on Tesla is super straightforward. Like I've got these little doodles here. I'll delete them. But like I've seen this like 1,000 times. And I was thinking about like how simple it is. It's like really simple. When you look at this setup, let's look at AMC back in like November of 2021. You see this same kind of consolidation into a cat ear. If the cat ear breaks here, it's going low, like real low. But again, this is an inverted chart, which means it's probably going to go pretty high. And like this is actually the marker that you would use right here on the wave cross. It's like it's like a halfway marker of sorts right there. And so you're likely going to be coming to like the 390s, 400 pretty fast if it goes the bullish route, which is a very big move. This is not like insignificant, right? Even in share value, that's like 30%. And it seems a little ridiculous because you're like, well, Tesla has all these problems. Like fundamentally, it doesn't seem like it would hold up. But I don't think so. I think this is like a potential 1, 2, 3, and then this is a 4 with a 5. And I'm looking at that 5 and I'm like, yeah, I'd probably go pretty far. And then there was a widening spread of sorts on the way up. It's certainly possible it's eyeing 450. And on the macro, like the big picture, there's a huge wave coming from way back in time. And it does look like it's aiming towards 450. So like, it's interesting. You flip the chart, sometimes it really just kind of changes your perspective. And I was thinking about, there was somebody in our Discord group, I think it was Darth, I don't know if his name is Darth Vader or something like that. Maybe it's Darth something, but it sounds like Darth Vader. But he was talking about 260. And I was like, well, I see where that's coming from because there's gaps that we didn't come back to. Like it never came back to 240, right? Never came back to 230. And there's a ledge right here at like 272. And under some circumstances, I would have expected this to be back tested. And it was. And it was back tested, but it was done on June 6th, which is finished. And then I'm thinking about like, what happens if it goes there? Really, the main reason this would go is if it jumps like the major creek and then advances into like an SOS. And yeah, you could head all the way to like 260, but it would have to then have some kind of like a new distribution basically up here to kind of reaffirm that it's going to return. And what I mean is like an accumulation really like there. So I have to go really low, right, in order to sort of make it all the way there. And I was thinking about how like, what's the bare minimum for a distribution here, or and if it's flipped upside down. And I was like, kind of already did it. It tried a strength test. It tried to come back below 300 right here. If this holds on and it reverses, you're talking about basically like a spring, like a phase B spring. And then if it comes back above here and breaks out and goes, it's probably going to do a full reversal back to the top. What we typically see is that this ends up being like a swing around and you end up coming back over the top of the triangle for a strength test the opposite direction, which makes perfect sense. And so you look back at this and you consider like where that is, you're like, oh, okay. So basically we've just kind of narrowed the box here, you know, in terms of like where those resistances and those levels are. It's pretty straightforward. And so I'm looking at this like, you know, I know there's a gap today. I know the market is kind of digesting and not really liking a lot of the news that we've seen. There's obviously a little gap down at 295. That's still on the table. I wouldn't necessarily put it past it to go back down there one more time if this is, again, misjudged and this is really like a smaller, tiny micro range down here. There's really similar setups that we've seen before on both Tesla and AMC. And I'm like, that's a reversal that could basically just break you out. Now, you could have a double where it just kind of starts swinging like crazy, but, or a triple, I should say, because at that point I'd be like 3. But I'm like, this is a very classic setup and it's really strong. And I did a measure just to see, like, well, what happens here, you know, if it goes the other way from where it kind of topped off. And I basically found that like this measure right here is very much in line with what your expectations would be, coming back up to like 428 with a midpoint around 357. And I was looking at that thinking, you know, again, what would that possibly be going for? You know, you'd have to be kind of aiming for certain supports. And there's a support right there. It's not that complicated. It's like a really simple setup. So I was like thinking about how right now what I'd be looking for is like what an indicator that's saying like, yeah, it's ready to go. EMAs are kind of in the middle here. It's kind of chopping through them. And then it depends on which time frame you're looking at. And then there's no, what would they call like golden cross kind of moments just yet. You'd have to have more happen, I suppose, for that to occur. But I think if it came back up and did this rebound like I'm thinking it might do, As long as it does sort of a corrective rebound that is an equal part flush, it's actually looking really good. Right now on the hourly, there's a bullish divergence on this bottom. And I'm looking at this bottom and I was like, well, what would this be then if it's a bullish divergence? If it's truly the bottom and this is an auto reaction, then you have like a phase B top already. At this point, you could either just kind of hold where it's at and go, or you could go down and even back to the bottom here and just iterate again, essentially like the same thing. If you wanted to try to drive it down for more of like a macro, well, not macro, but for like a more micro spring, you could totally do that. And again, that leaves this on the table as like a weakness then. Like, well, then it could still go down again. I don't want to buy it. But that's not really like a huge difference in this particular case. Now, if it dropped below that level here at like 295, I'd be very much like, better just wait for the real breakout. You know what I mean? Don't try to like guess. But like this setup is pretty strong. The only other time we've seen something like this on AMC, I'm so used to on Tesla, was when it hit the bottom over here and did this. This is a really similar kind of setup, believe it or not, because on the 4-hour time frame, if you go back and you look at this area, this second bottom made a higher low on RSI. It was clearly divergent, right? And so the opportunities are there to swing a big something or other like Tesla. It is a very expensive stock if you're like risk averse and you really want to go far out, because it will be very, very expensive if you're trying to do an options contract for like next year for Tesla. It's going to be ridiculous expensive. But if you see these moments where it's like, it just needs to make that higher low, this is the exact same setup, guys. Like, it's no different. You see that reaction? Even here, there's like a little auto reaction, secondary top, bottom, but then look at the bigger one. And this is like our classic, we talk about this all the time on this channel. This is like our classic bottom right there, Like it's compressed, but that's the same thing we look for like every time. It's really easy to read bottom. It really is. If you see that, especially if it's making like a higher low, that's strength. Higher low, even if it comes back down to this particular bottom, like all of that indicates to me is that this is like bottoming out. It's got strength. This is a strength test up. This is down. Currently the up is advancing, right? Advancing. The down is not advancing. And all this is just a really smart backup. And you can see it right there. Like, look at the volume right here on this bottom as it pertains to like where that volume is. You can see it in the volume. Like, there's no volume in the drop, even though this drop is really dramatic. And that's it. Like, it's making the higher low. Once it jumps that threshold, it's off to the races. Like, that's it. Now you're in buy mode and it goes up. SOSs, it goes up again. It's super fast. So like, this is not an easy one to trade for everybody, especially if you can't trade options. You might even not want to even look at it because you're like, well, it's way too expensive. But this is one of the most volatile of all of them, in the top 10 stocks on the S&P 500. It's probably one of the most volatile for sure. I see this as basically the exact same setup. It's very, very similar. The only difference right now is, again, it's kind of refusing to go back down to that 280 zone. That makes me a little bit nervous. And like I said, I'm a little bit shy about that area beneath 295. I think I'd be a bit cautious about it. But the consolidation here into the particular formation that we're making right now, to me, it just smells like potential. I know that the volume on this drop is higher than maybe what was around it. On the big picture, it's not like some massive high volume drop, right? So I don't see it as like a huge problem. So basically, I'm looking at this like, all right, well, you have a big reaction. You came back down. You did make another low. So there's a little bit of a weakness here in that strength test. It punched through. Again, that might indicate that this needs to come down for like a spring. But like locally, this is still looking pretty good. Like, it's reacting in a very healthy way, in my opinion. So I'm looking at this like right now, it looks pretty darn good. Like of all of the ones I've been kind of watching, we're finally getting like a decent looking setup. And I'm not particularly worried about it unless, again, it dumps way below like 288 or something. Then I would be a bit cautious. But the overall motion here, I went back and I double checked on S curves, and I looked again. I'm not going to go and leave them all on the chart, but I looked at cross ups and like where these things are moving. I checked on the macro, like this is a big S curve. What happens if it's a big S curve and it's kind of breaking back up? Like where are those directives? There's a decent chance, although I wouldn't count on this. There's actually a pretty decent chance that if this thing has a short squeeze right now, it's going to go to like 450 in like the next 10 to 20 days, which is a bit insane. I know. I'm like, that's not very typical. What I'm thinking is that that's more likely actually like the place that this picks up volatility and changes direction, like a pivot point, not the actual high. But it is there, and like that's where the macro S-curve took me. So it's very possible. It seems impossible because it's so far away from that, and that's a huge move really fast. But again, it has to do with macro and micro, not even micro. It's really like from April. That's not that small. Curvatures. Between August 13th and September 15th, that's a month-long period. That's a much larger window, but I actually think there's a very high probability that it's going to be hitting like 450, even if it drops down pretty low. Like I'm a pretty darn, I can't confirm it because it really confirmation is here up around 350, but like that's still a $100 move. That's huge. That's a big move. What would catalyst that move? I don't know. The robo-taxi stuff's the big ones, and then he's talking about valuations, but it's a proof of concept type deal. You got to really show that he's going to be able to execute. And so far, Tesla's been really bad about executing ideas, to be fair. They've done a lot. I'm not trying to be down on them, but when it comes to like the robo-taxi and AI junk, it's a lot of promises and not a lot of follow-through just yet. And a lot of regulations are preventing them from like moving forward really quick. So anyways, earnings this week, you've got Palantir, that's a big one, Uber, Shopify, AMD. Shopify is probably going to be your best bet here, and Uber maybe. The reason I'm going to say that is because there was a huge exodus in the last couple weeks of tech stocks. Tech stocks have been largely selling off by institutional owners. So the sort of the sideways action that you see again, it doesn't mean that it couldn't go up again. That's not what I'm saying. Obviously, I'm sitting here saying like, well, you might end up with a little more down and sideways here potentially going into September. So that's something to think about. August and September are usually not very good months for the market. So sideways is certainly a good guess. It may be like the most accurate guess is just to say sort of sideways, like we're probably going to be where we are, in 15 days or something like that. That wouldn't be a bad guess. But things like commodities, like people buying in just on Shopify, and then Uber, which is just transportation, those are things that I think even during like a recessive period are probably going to be fine. So I was just like eyeballing it, and I was like, well, if I had to pick one, those are ones that more likely, if they do well, are going to sort of follow through on that. Like I tried to trade Google, and I still am bullish on Google, but let's be honest, like after this earnings, I mean, it hit a peak once at like 198. That was it. And then they've really been kind of chopping and having trouble holding on to any of that advancement. And there's certainly room to come all the way down to like 180s. So Google's one that I'm like, yeah, September, I think it'll be back up to its all-time highs. Like I'm pretty sure September, October is going to be back up here. But like in the meantime, there's a ton of space here. There's a lot of room for correction. RSI is kind of blown out. It's Google. It's run up before Alphabet, right? It's run up before and kind of stayed up and elevated during these run-ups. But even still, this is a very difficult time for the market. It's hard to make an argument that it's definitely going to, do this or do that. It hasn't yet chosen upside as direction. So we do use Wyckoff sometimes, but in this case, just the simplest of outlooks is probably appropriate. If you're making higher highs and higher lows, then you just could say it's making a widening spread, right? And so far, that's all that's happened here. So if you look at from March 2024, this is a year over now, like year plus. If you look at this region, all that's happened here is just widening. Now, a widening top could be very, very bullish, but we don't really have any indication that it's going to break to the upside. Not yet. I mean, you could definitely look at this on like a weekly or monthly chart and make an argument that this is what's going to happen. But just, again, most basic possible view is that this is just a widening spread. And if it does break to the upside, yeah, that's like hella bullish. Like it's going to be really, really bullish because that widening off of the previous top, right, that goes back to 2021. If that breaks up, it's going to move far. Like bullish breakouts with widening tops are extremely, extremely bullish, especially on these big ticker stocks. So like, it's certainly possible that that's what's going to happen here, and it's going to go to 300 or something like that or more. I'm not going to put that past us, but we could be talking about what we've been talking about a lot, which is like by 2026 kind of thing. And in the meantime, like, yeah, it may get up here eventually, but in the meantime, it's like, well, what happens? Right now, he hasn't even come back to the all-time high. So it hasn't continued the widening, right? And I could definitely see, again, like a period of sort of sideways where things are ironing out with this, that, and the other, specifically like talking about like tariffs and rate cuts, and maybe not seeing that until a rate cut happens. Who knows? I don't know. In September or something, and have that kind of be the breakout moment when that finally goes up. And in the meantime, it's kind of just down and sideways. You could easily have a deeper retracement period. Because this is a widening, you can look at that and suggest, well, there's a middle somewhere. It's probably pretty straightforward. Now, this isn't true for all tickers in the market, but I'm just saying, like, again, a quick kind of analysis here of like what we're talking about. Again, it's yet to make a new high, so it's not followed through on any patterned widening just yet. Like, so if I were just using the tops, and that's what I'd probably do here, just, again, simple. This should be hitting a top up here at like 230, right, or 225 or something, if it were going all the way back to the top. Well, again, it might do that going into earnings. Like, it could be way up here, by the time November comes around. That's certainly a possibility. I did the measurement here, and this would be like a kind of a wave 1, wave 2 situation on a double M, double M, double M, double M, and there'd be another one. And the measurement does give you a lot of room. Again, you could be going sideways into September here. There's really no pressure to break out early. You pretty much already come to the top of the local channel. So you could maybe do it again, but it may only hit like 205, and then it would be a breakout. So it's like, there's certainly room here to go up. That's not what I'm saying, but there's also room to come down. What if it breaks down? Again, the market is not, this is an interesting one too, because Google looks almost exactly like SPY, like in this case. And they both have this kind of widening that's very interesting. And I checked it on the S&P 500. And it's going to look a little trippy, but it is a little bit trippy because I kind of did it as if it were like the artist in me. I was like, I'm going to do this as if it's drawing in perspective. So it has this appearance of like it's coming at you and it's getting bigger. But I did that on purpose because I was like, I don't think the market's three-dimensional in that way, literally like a three-dimensional drawing. But it does help because you don't have to have... if you have certain tricks and it works to give you ratio, really all perspective tricks that you use in drawing are ratioed, proportional ratioed drawings. There beneath them, there would be like a logarithmic model of, increased over time or whatever. there would be like an algebraic equation behind it and how that increases, but you can do it visually and get a pretty decent estimate. And what I did here was I just took it and I was like, let me just put this on here and just see what happens. Let me see if I can find, if I put this into perspective, what would I see visually on this widening and where would these supports be? And interestingly, the supports and the resistances are expanding pretty regularly. Like they look right. So this one right here, I have this yellow bar coming through. And every time it's gotten to the middle, which again has changed over time, because as these widen, the middle is actually not flat. It's not like sideways here, right? If you did it perfectly sideways, it just won't work, which is, again, pretty interesting. If you go backwards in time and you use the bottoms and the tops, it gives you a pinpoint back here at like 530, which would be like kind of the original center point. It's a little bit above this 525 top, so it makes sense. It should be right around there. That's the peak, and then it broke out above. But it's interesting. I thought it was just a fascinating way to look at it, and I was like starting to look at it. I was like, you know, if that's the case, this should have dropped down, and it did. And that's that's kind of the crazy thing about it, is like I was looking at this, and I looked back in time, and I thought, well, S&P 500 has regularly kind of chopped along both the middle and this yellow zone that I marked off. And I'm not trying to be like perfect about it. I'm just trying to kind of mark off this region. What is that on the Fibonacci scale? I don't know. I think this is the 0.5. So it just depends on which direction you're drawing it. But this would likely be the 3.8 or something like that. I don't know specifically which one it is. But it also depends on where your tops and bottoms are. I don't really care for this example because I know it's a fib thing, but I'm really just using like the lines. Like I don't really care what they represent that much, except for what it means, you know, in terms of where the support is and where the resistance is. So on this chart, the rainbowy area up here near the green, the orange, and the red, that's the area that's been the top. Like that's where your resistance is, pretty straightforward, right? It's hit this area twice, and it repeatedly distributed in that region. Interestingly, it's created these shoulder markers in the same places every time. So you have the shoulders over here, right, off the middle, and it's specifically this yellow area that I've marked off, and then you've got the shoulders here, and I can't even draw it right because it's at an angle, but you see the shoulders marking off here as it rises. So again, very, very simple. And the main motion is this arc, right? And it's an ugly looking arc. It's hideous. And I took it out and I was like, well, I'll just play with the idea like that this just continues indefinitely. It won't, by the way. Okay? That saying something like that would have been like going back in time back here and saying that these are going to continue indefinitely. Like these bounces. It's just going to keep doing the same thing over and over again. And these bounces are going to continue indefinitely. Well, I'm not even going to like guess about this because I'm pretty sure it hasn't happened. I could look and find out pretty fast if this has truly happened already. It's not that complicated. You would just take it from the top through the middle and you would say like that's where it should have ended up, somewhere along the line. And you guys are like, well, it hasn't happened yet. It's going to happen, man. I don't know. You be a conspiracy theory guy if you want. I don't care. It would basically be like, this won't happen till way over here. And I guess it would eventually happen, but maybe it will. Who knows? It'll go back to 140. You guys are like, that's never going to happen. Well, there you go. That's what I'm trying to say. I don't think this happens indefinitely, right? It's just an example because eventually this did break out. Like this is a widening top right here, right? And eventually this breaks out. It does come back in, of course, and you no longer really use that pattern anyways once it's out, but it did break out right here. It's pretty clear. This isn't me making stuff up. You can see the line work built into the breakout, especially right there. Like look at that build out right on top of that widening. I mean, it's undeniable. So I look at something like that and I'm like, did this continue indefinitely? No, of course not. It didn't come up to the top, you know, find support here and then drop again. So there's certainly elements here of like, we don't know, but when it stops, but you can at least take that pattern and apply it forward. And it applied way out here to like 300, which is kind of interesting. So it goes back to 300, wherever this is in the future. And I don't know where this is in the future, guys. I'd have to go to like the daily or weekly or something. February 2030, right? What was curious about the 300 motion on this for SPY was it still peaks really high. Like this would still come all the way up to like 900. And that seems a bit ridiculous to me, to like go to 900 and then drop away to 300. What was also curious though was where is that level? And that I found to be very interesting because the level that was kind of long-term, again, it's trajectory targeting. I don't think this happens in this exact way, but it is an interesting idea because the level it came back to was actually June 2020, which was like after that COVID drop. That is essentially like where that ceiling was. We have this overextension going into COVID, and then that's where the floor is. When we came back out, was 300. Then we go into an SOS and leave. That's not exactly like when we look backwards, we have to say, but then we found support on this top, and then we found support on this top. Yeah, I know. There's like a dozen stops on the way. Like we've already hit this top again. Nobody's arguing that. So don't take it out of context. But I am saying that's an interesting idea that like we're kind of using this as like an anchor of sorts for this fan that we've created. More interesting than that, I suppose, is like what does the upside look like right now? So let me go back to I'll go back to the 4 hour. So I'm talking about this because I was just talking about Google and Tesla and all this stuff. And you're like, it doesn't seem like a great spot for the market to be in. High volume selling here into this new tariff deadline. Certainly this could just be like a reaction from that and we could just continue downside. I'm not going to say it won't happen. It might happen at this point. But it is fascinating then to look back and just consider like this as a wave and like think about, well, if this was the previous peak of the wave or if this was the previous peak of the wave, like how do I see it moving forward, in this schematic? And I have some like angled lines here, but the best one I think I found was this guy, and I left it on the chart because it seems to apply fairly readily. It's like where we are. And what I noticed was that there's a collection here. If you look at the projections from the previous top, which I would call like a cat ear, a 1-2 double top, and then you look at where that resistance is, there's a lot of interesting, I guess you should say, convergences, I suppose, is the best way to put it, like coming together of different markings. That would be a convergence, right? Overlapping, I don't know. They're not all mutually exclusive. Some of them are very similar, but they have connection to this same area. That makes sense because previously this yellow zone, even down to the middle zone, has been a support. Like we got to find support. Now, in the past two examples, they actually the market widened going into the top both times. So I drew that out because I was like, well, that's interesting, that there's this kind of early widening that's beginning to form until you get that final expression of push into the top. And both times you see the same thing where it's like building out higher highs, whereas the lows, they're higher lows. I mean, technically these are higher lows, right? They are, but they're following like the same trends, which is fascinating. And again, once you get to the widening top, then it has problems here because see how this fails? It makes the lower low lower than here anyways. It's a sign of weakness. And like, it's actually kind of obvious when you stare at it this way that dip beneath there and then failed to advance again. And then this is like confirmation of that. It's like going down, and the rest of these held up. They didn't dip below. They don't have that weakness. So I'm looking at this right now. I'm thinking this seems like a really easy way to kind of measure the top. And we have a little bit of a widening spread at the moment on the peak of the S&P 500, very similar to what I saw on Google, which again, they kind of look almost 1-to-1 in some regards. And again, you have this idea that like, well, we don't necessarily see a lot of strength here, except in that it did hold above the yellow, I suppose. And if it dropped below, you might say, well, it's done for then, right? Yes and no. There was a time back here where it extended and then it came back below. So I see it as a, not really like a, this has to be exactly what happens kind of thing. This is the most unlikely of the situations where this widening breaks upward, in which case it'd have to cross above 650. And then it could potentially just rise all the way to the top of the channel here, which is really high. Like it did melt up like that previously in November of 2024. It seems more likely that that would be later in the year than right now. So I'm like very doubtful that this happens. Very, very doubtful that it just breaks 650 and runs all the way up to like 690. But later on, that might play a part in this. You know, we may have like a single moment, and that did happen back here, probably again due to the election. There's a similar moment previous to that that happened in July and going into, and this did actually go July into the end of July. It wasn't a very long period. So it's like July 2nd into mid-July. And that's also a massive push. So there are these kind of like pivotal moments, but really if we look at this and we're just being judicious about it and suggesting that it's got some kind of a, I don't know, like an equivalency to the previous times, we would suggest that this is probably just the beginning bounce and like we're just starting to establish that again. So what would that look like? Again, like there's not a lot, like a very strong probability in my opinion that this just breaks the high here and runs all the way up, but it's a possibility. The other one is sideways, and that seems more likely to me because of the nature of where we are. Again, the September-October period could be okay. Some stocks like Tesla, they've been very bullish into October. Tesla's a little different. It runs on like a month off from a lot of the other tickers. But for the most part, August, September tends to be a pretty crappy time for stocks. So for the most part, that's true. And historically, it's just one of the weaker gaining periods. Doesn't mean it's a losing period. It just doesn't gain as much. So when I look at this, I'm like, all right, we had a gap down here. That's very low. That's like 590. And that would probably drop you too low, like you'd be beneath creeks. Doesn't seem as likely to me that that's going to follow through unless it's some kind of a long-term distribution. Like downside is going to happen, but it's going to happen like maybe way over here somewhere in 2026. That seems possible because of this early SOW right there. This always kind of bothered me when we came up. It's a strength test, don't get me wrong, but it kind of indicates that, yeah, we may come back later, but I think that could be a signal of like way later kind of stuff, like way down the road, even after like February, then coming back low. I think it's certainly possible. So I don't know. Could be now, but I'm thinking it may be more or less later, like 6 months out plus. This, though, on the whole, would make more sense to kind of push the boundaries as much as it can. So the other one that's probably the most important is this red marker here, and I'll bold it. This seems to be the major resistance. So if you look at any time it's come above here, it's been extremely few and far between, and there's only been one time. Maybe you could count it's two, but really, I think just one major time where this showed any kind of possible support on it, and that was in November of 2024. Every other time, it's been just popping up above and dropping rapidly within a week or two. So everything above this red marker here would be like an extensionary period. It wouldn't really make sense to use this as like it has to happen right now kind of thing, but rather you're going to build out. And so my guess, if I were just doodling this, would be that you'd have some kind of a connection here. It already did hit it. You might come up higher, but then I would suggest that this seems more likely, something like this. Just based on what's happened in the past, this is historically what's happened, at least in the way it's gone. Every time it's come back up, it's sort of checked that area out, and then it's backed up as far as it can, typically to the yellow zone, and then it's broken out again. And you're really talking about a bigger widening. And then this is where you have that kind of aha moment, and it makes more sense to have this over here going into like a Santa rally period. So after November, again, after November down here, maybe there's a breakout moment. And again, just using like simple ideas, like this is where that resistance is currently going. It definitely matches kind of the directional moves here that we see. It matches like the overall trend. So this is a very much a sideways period. Maybe there's some more upside, but then you're really looking at this from the lens of like, okay, if this is just the beginning of a widening, then we could be talking about, instead of looking at it as like a small widening, like, no, this is actually the beginning of something much bigger. You could be looking at like an August pump potentially, but then maybe like a mid-September to October slump, and then you'd be talking about like a Santa rally kind of rise, perhaps going into January of next year or something like that. And that makes more sense to me than just saying go straight up here. So I'm looking at this like it's already hit the yellow. I guess it could just bounce and go. You know, if this is like that moment after COVID, you might say, well, yeah, but remember, Booksy, after COVID, it hit the bottom 3 times. It just took off. We don't need to come back down. You're right. You don't have to come back down. Hit 1, 2, 3. It could be that after COVID moment. This is what I would be looking at, like right here, like this moment. And this is what I'm trying to say. Like the August move seems improbable to me, but mostly because it's way too fast and I don't get where it would come from. But if you look at the setup, this is where you get that like, oh, this could be like one of those crazy moments where the market just kind of rallies. Why? I don't know. You know, like, what's the reason? You gave me a good reason. All I could tell you is that's the comparable model. Like if I were looking at a model saying, well, this is probably what's going to happen, and saying that I think it's going to go back to the top right now going into August, September, it'd probably be this time period from 2000, and this is August 31st, by the way, right here. This is one of those examples where August and September were pretty bullish. You know, this is August all the way up to the top, and then it goes into September. September is a drawdown all the way to November. So again, this is like a secondary way of looking at it that says, well, it's not as simple as, you know, you saying it is, where it's just going to chop along the top and go. It's going to have this push first, then back up. What's the difference? I just said it, you know, like that's really all there is to it. Like the only major difference here is you're still going to come back to the same area. That's the thing, is like in this case, if this had not gone up to the top and had gone down and expanded again, you might have come back. You would have done like this. This is what we would be saying, right? Instead. But in both cases, like you're still going to come back down and then you're going to hit the top. The order is a little different, and it probably determines in part what happens afterwards. But I would certainly suggest that that's a possibility, you know, that instead of like sideways here and up, like an S-curve, you're having a rapid S-curve and then a backup. So this is like the rapid S-curve and the backup into a quick SOS and then go. I'm going to delete this other one. Versus what we saw here, which are very like methodical. We're going to approach the top and then break out moment and make that higher high. You can see the difference, I think, pretty readily in those two models, right? And if that's had done that, again, this would have been the expectation that this would have gone into more of a sideways period and then popped later. So I see it as like apples and a different kind of apple. Like they're both going to probably hit the same marks. One of them has some kind of rapid fire acceleration and the other just kind of goes. So if it's going to break out and run up into August, and you can see August 30th on my chart is right here. I'll mark it off. It's right here. You could very much have like a repeat of the COVID era rally. You know, that's not impossible. What it looks like, though, is a bit strange because it would break out here and then rally really hard into August, but then it's going to have like a deep backup going into November and probably at least come back down to like 640, which was the top that was just created. That's the most likely situation if it does something like that. So could the S&P 500 get close to 700 by the end of August and then have a big backup? Yeah. Would that be consistent with some of the ways that this has been traded in the past during these times of the year? Yes, it would be consistent. However, it would also be fair to just, again, using like this really simple method to suggest that while that is true, like that is a possibility that we end up here by, late August, which is kind of adds to the idea of that rally moment, for the market. And I don't want to draw too many comparisons to COVID. It's not exactly the same. It also makes us question what happens with AMC, doesn't it? Because you're like, well, then AMC is not going to move at all, right? That's what happened back then. It died during that time period. Again, we got to be careful with stuff like that because I think there is certainly a parity, but it's not necessarily exactly the same. There's rhythm, but we can't say it's going to be exactly the same. That's not possible. But then the alternative, again, would be just kind of a sideways stagflation type, if you want to say that. Consolidation, I think, is a better word, period of. And it's probably very similar, Like, there's not a lot of differences in these, in my opinion. And the only thing that you would probably run the risk of is I'm trying to make sure that's lined up with that previous top. It'd be like a breakout moment of sorts. There'd have to be something like that, like this. The only thing that you might run into that's kind of a problem here is with this assumption is that maybe just picking those levels for bottoms and tops and being like way too overly bullish or overly bearish about them. I do think it's fair to suggest that if this is going to eventually advance, let's say by February of next year, specifically going into January, February, which is, I've got it boxed off on the chart over here. If it's going to advance in this time period, then what you establish right now essentially becomes the top later for that time period over here. So there is a sense of it has to make, there's a sense in which it has to make sense. There's a, sorry, that was a dumb way to put it. It's like, I speak language. I know words. This is the way I would see it, is that there would have to be some kind of a setup here where this is a push of the top. I think in the, I'm not sure. Let's go back. I would think that there would need to be some kind of a bullish push there, but I got to double check. Yeah, if it's there, it's very, very, very small. There should have been some kind of an advancement right here, like a sign of strength on that. And it looks like it's there. I know that looks like cheating, like I just put it there, but I really did. I put it at the top here and the top here, and you can see it fairly clearly, like punctures it just slightly. And it probably did that here as well, where obviously this is like accelerating. So if it had another moment like that previously and it still dropped low, which was right there. But I would expect there to be some kind of a push of the top if it's going to advance afterwards. Again, making that higher high, which hasn't happened yet. So you guys are like, yeah, dude. Listening to what I'm saying, right? Which is on this widening. Has it reached the top? No. If it stopped where it was right now and came down, we would say that that's actually, it's not necessarily bad if it stays high, but if it came down and broke through the creek, it would certainly make this look kind of weak. Like we couldn't even get back to the top of this trend, which has been used repeatedly. So this looks very similar to that setup. And we've been talking, it's funny enough, we've been talking about August for a long time, like a really long time. And as a first kind of break moment, and it was like, it didn't really make sense to me. So I started looking at this kind of stuff and I was like, well, I guess it's possible, that this is going to do like what happened during the COVID era and have like a massive reaction after this huge drop, this huge sell down. We'll see. It is weak. I mean, I don't personally think that the market looks particularly strong right now. The volume in this area right here is kind of a lot of selling in that. And, you go back to COVID and you try to draw that same comparison, you're basically looking at, again, an area like this, and you would be saying, well, the volume's pretty high right here on this sell down, on this test. Does that mean it's not going to go up again? high volume sell-offs are high volume sell-offs. In context, we have to look then at the highs versus the lows. Like, did it make a new low here? Did it make a higher low? Were bulls successful in stopping the high volume? And then what happened after? There's no follow through on bear's part here. On the second sell down, the volume's like gone. So that's the comparison you would draw, is like this region that happened in June of 2020, if you were using that as a comparison, which I think is appropriate. You know, I've got one other thing on here, which is the EMAs. This I think is the 180. That's the one I usually have on for the 4 hour. Where is that at? We're already above it. I mean, we haven't checked it in a little while, but we're kind of floating above it still, which is bullish for the time being. When would that check, if it's going to check? Could be right now. I mean, you could slide through and check that. If you came down to 600 at this moment, where that gap is at 600, you'd be right at that EMA. Does that have to happen? No. And somebody that says, well, I think we're going to go to 600, I could see why. I mean, it makes sense. But I don't think that that's a rule, like, oh, it has to do this, you know. Nah. Really just want to see if it can recover certain loss trends. Like the one that it went back to test here, didn't even get to it. And that one's still intact. But the rising trend, I think, broke. So that would have to be, and I've already got it on the chart. I got this pink trend here. Now, but there's two other white lines on the chart. Both of that, this one's already broken. Like this was kind of the highest trend that I could make, maybe right here. You can see there's trajectory input. This would be the idea that you're trying to stage a run, but you have too many sellers, so you back up and do a strength test to see if sellers jump on it. They definitely have heavy selling here and here. But again, if this can rally back through the top, just like we see in the COVID example, like a mini version of it is what it looks like, you could definitely have this widening break to the upside and begin like a big rally. And then that brings back into focus like, oh, well, then this previous trend may actually apply into the top. It's still there as a trajectory. Maybe not the best one, but it's there. So I've got a few coming from the bottom. Again, I'm not looking at trajectories like they're the end-all be-all, but I do think they're important. And all things considered, an August run with then a backup period into September, October, November doesn't really feel very like out of place. It kind of makes sense to me. It'd be a little bit weird only because the news that was announced that dropped the market here feels very heavy, right? Feels very heavy. It doesn't feel like a good time, right, to be invested in the market. So you're kind of like, why in the world, would I even take the chance that this is going to rally all of a sudden when everything seems kind of bad? Again, I don't make the news. I couldn't tell you what's going to happen tomorrow. Like, I don't have a crystal ball in my back pocket. I don't know if it's going to be bad news and it does this path, or it's going to be good news and does this path. But I do think these are very valid trajectory paths. Like, I think this makes a lot of sense. And walking out of these paths would certainly cause some kind of a contention zone when you come across that marker, right? If you keep walking across these rising trends, you're going to eventually run into the same problems of we got to figure out which way we're going to go. That usually increases volatility. Hence, you get these widening marks, right, on these S-curves because it's coming across those initial trends that we're building to the upside, right? You get these widening kind of, we're going to go moments. And that makes sense to me that would happen in those moments. So that's where I'm wondering. It's probably going to be pretty soon, like if you're going to run into August and you're going to run the month of August, you're going to see some very clear signs here. The first and obvious one being that if it does come down again, it's going to be really weak selling volume. So if you see really, really weak selling volume on this down push into like the 618 area, and it just kind of slows in and makes a higher low and the volume's garbage, I'm going to have to just suggest that that's bullish, because as an indicator that would say that the sellers aren't really capitulating the stock, like the buyers, I mean. they're not like letting it drop, right? And that the sellers aren't coming in strength. Really straightforward stuff. That's all I'd watch for. So if it comes back down to fill the gap that it made today, I would just be like, okay, well, maybe we're just going to gap up and keep running like we did back here or here or here or here, like a number of these that just gapped up and kept going. But if it does come back down, I can at least watch the volume. I can also like look locally and see if it's just breaking trends. I think the market on the whole already broke a trend today. Like this looks like it's broken right there. Yeah, that's what jumped over. But you know, if it makes a top, then you have a new trend top you can use. I think there's a wider one right here. If you use this kind of final 1-2 hit, that's pretty wide. We haven't jumped that yet, and that's pretty much nigh. It's like about to happen. So if it goes over that, all right, you know, confirmations of upside. If it rejects there, then you're looking back at the previous one saying, okay, well, it could come back down pretty low. Let's see if it holds instead the supports and see what the volume looks like. And if the volume looks good, we could be talking about a breakout as soon as Wednesday down here. And that, again, I wouldn't be second guessing it. I really wouldn't. I would just suggest to you that's bullish, you know. So all of this points to early week moves here. Now, AMC, I kind of danced around it when we first dropped in. I didn't really want to jump right to AMC. I wanted to point out, like, I actually really like the way Tesla's set up right now, weirdly enough. I like Google's setup because it's kind of matching what I'm seeing on the S&P 500, which looks pretty good. I didn't talk about Apple. That's the only other one I've really been looking at. But I did mention, like, there's a few earnings this week that could really help prop the market up. Palantir, guys, I'm not in Palantir. I missed the boat. It's probably going to the moon. Who cares? You know, it's going to keep going with backups here and there. If you want to ride that wave, just look at the macro setup and see if there's a flag set up at some point, and then trade the flag breakout, and you're good. Like, that's an easy way to trade a big momentum stock like that. If it's already in a breakout moment and it's running, then you're really just kind of chasing it, which is fine. It could keep going. It could not keep going. Just use common sense. Into an earnings, I think it's probably going to be, they got a lot of contracts and junk this last time, so they're going to be fine. Uber, Shopify, AMD was one we picked out when it was like $90 and it's like $150 now or something ridiculous. It was a great pick. I traded some of it. I didn't trade a lot of options on it, so what I do have right now is like, you know, a few shares. It's not very much, but it's probably going to keep running, you know. And like I said, I think Tesla's in a place right now where it could just have this melt up kind of moment, weirdly enough, you know, even though it may not seem like it because it looks kind of crappy to a lot of people. I am a bit nervous, again, about that top. So that's what I addressed in the first little bit of the stream, and I didn't really talk about AMC except to just kind of reference. My bet is Palantir crashes today over 70. Yeah, I think the last earnings I did try to trade it was a while ago. I think it was 2 earnings ago, maybe. I can't remember. It dropped right after earnings, even though the earnings was a beat, but then it bought right back up. So there was a nice drop opportunity, but then it just bought right back up. It was like a huge beat, and it still dumped like 20%, but then it just rebounded and kept running past the highs. So here's what I think about AMC right now is AMC looks like that typical AMC garbage where it's like lowering itself into a range with this bizarro kind of like hooking action, right? And I've been a pretty strong proponent of the idea of iteration here for a while. And like, if I had to give you my answer, I couldn't give you a definite answer right this second because it hasn't actually pushed below the previous bottom, which means that there could be a very strong change of character here in this model. And that's not a bad thing, okay? But it does mean that I'm a little bit indifferent about it. Like, I couldn't tell you. If it had pushed low, I'd be a lot more single-minded about it, I think. Because if it had pushed low, I would have said that, yeah, it's probably just going to do this typical like walk down with a hook. Most of the time, when we come into these bottoms, if it's avoiding the bottom, that could just mean they're going to prop it up a little bit longer, but it doesn't necessarily mean like short term, you would not have confirmation of downside. You would have probable pops to the upside. And that does kind of make sense from here if it has this like pop to the upside going into earnings. I was looking at the wave and the way it's built, and it did end up matching kind of what I had anticipated here with this little green marker that I made. It's very simple. It's just a simple trend. But what this would be is like a wave down cross. Now, it didn't come to like the very bottom, as you can tell pretty clearly. But where does it intersect kind of the middle is right here, and that's exactly where you'd expect it to, because that's where the 180 on the 4 hour is. So it's very likely you get a 50% retrace here going back into earnings, potentially even farther than that. And it just depends on how quick it goes. But this is highly probable. Like, this is really common for AMC. It's been doing this, dare I say, religiously, because it has, right? We typically will get these backups that come back up and retest like 50% zones on these drops. This has happened like frequently, all the time. You know, even like on this macro drop down, this is basically just a 50% retest. So for us to like suggest that it goes beyond that would be a change of character, but it's consistently done the same thing in these rebound efforts. So that's my expectation right now. What's curious about the 50% rebound for AMC right this second is that on the macro picture, it hasn't yet made a spring. It's just made a bottom, like a phase B bottom. And it's currently doing kind of a similar thing, right, on like a micro scale. We're kind of in this motion of, are we going to create like a phase B bottom here, and then what happens after that? Well, if this is a phase B bottom and you get a spring, then potentially, again, like we said, we're in macro LPS territory, because you could just change character by not going lower. You have like a localized spring, again, maybe going into mid-August, and then you have like a 12 session run up, which is 12 4-hour sessions is what I'm expecting. And that is your big breakout moment. And that literally starts breaking out by August 22nd, which is that multi-year mark going back to the split. That certainly jives if it makes that low here and just advances. It's kind of a squeezing moment, but it certainly works. And you also have a very similar setup to what I was just talking about on Tesla. This is not irrelevant stuff, right? Whatever we talk about in one place, you can use the same TA in the other place, and that's important. If it has this dip here and then it rebounds, you're basically saying that we can go now in a widening. So right now it's like been narrowing, like that's all that's been happening. This is just like a narrowing spread. But right here, this changes the character of it, where you're now in a widening. Well, what does that mean? Couldn't that mean that it has to widen again? I guess it could. There's a number of crazy, we could go bonkers with how many pads it could take. But certainly if it dipped into a spring and widened, you might say, well, couldn't it just dip into another spring here and widen, and then dip into another spring and widen? Sure. So on and so forth, I suppose. But the bigger picture is the bigger picture. And the bigger picture is that once you get above this marker here, now it's just above 360, guys. It's not far away. Once you get above that marker, you're potentially in like a big breakout zone, Like you can see it back here. This is where you could actually have some serious advancement. Now, there's one more place that you might worry about, I suppose, which is going back to the gap that was created on the 22nd and the top that was created on May 15th. Those run the same parallels. So if I were arguing for some kind of a weird motion here, I might suggest that there's a need for like a deeper backup. And this is kind of strange because I don't have a deep backup right here. But this is my prediction on this, is that if there is a need for some kind of a whip around motion with a deeper backup before you advance again, I'm thinking it's going to hit the same like 317 mark. And that I already went through last time why that number is so special. Well, no, I didn't actually do it on the stream. I did it on the Discord. It's a magic number. It's a really interesting number. It's extremely fascinating. I'm not going to go into that right now. I know you might want to hear it, but I'm not going to go into it right now. It has to do with like shift values, and that's basically where like the bottom is, weirdly enough. Now you might say, well, no, it's not. The bottom you said was on the shift was like around here or whatever. It's I say it's complicated. It has to do with like a 50-50 extension. And like if you shift the 50-50 extension, that the bottom was is like 318, which is really interesting because then it comes to this gap up moment that happens at 316. I think it's really fascinating. So I could share that information, but it's free. It's in the Discord. I did a long analysis on it and I was like, this is pretty crazy. These numbers click with everything else really well. So anyways, I think if it has a deeper backup, that's likely where it goes. And then it could take off and head back up to near 5. You've got that gap. You're probably looking at it right now thinking, well, it is where the gap is, right? I mean, it's kind of like right in that zone. Yeah, it's pretty high. But if you fill that gap, in this particular case, look at where it is. Isn't this crazy how this stuff works when it just works? It doesn't have to be this way every time, but it does. If you go up and you fill that gap, the gap is actually right here around like 510. That puts you above the mark again. So like it puts you right above that spot. This one puts you right above this spot. You get where I'm going with this, right? So like the confirmations, in my opinion, if there's a dip, it could come all the way back to as low as like 316. That makes sense. There's even like a probable channel mark, not a channel, but a creek right through there. That would be a sensible jump. If you make an advancement here and then back up, it would make a sensible move. If it came through here and then held support right in this region, it's kind of perfect. Especially if it makes another top right now. That kind of confirms where that other one is, where that creek is. So I would put that in your mind and think about this as like a yin-yang kind of moment. Like if it pops here and then dumps, you might feel bad. But remember, like a reversal puts you right in the pocket where you want to be, which is up here, and then you break out. And then it puts you in the next pocket where you want to be, which is right here, and then you break out. So each of these breakouts in sequence gives you the desired effect, you know. And then in between that, and I didn't put this on the chart, you have these other peaks, but these are just, again, resistance levels that are pretty common to us at this point. We don't really have to think too hard about them. This would make sense. Going up into the top. Where's the next one? Way up here. So this expansion, even though it looks kind of silly, this expansion goes like all the way, you know, to where you'd expect it to go to. I mean, that's kind of the crazy part about it, is it really goes back to this peak, and this peak. And each one of those in sequence is giving you kind of the next setup. And this peak being the shifted one at 13. It's like right on the dot. So yeah, the new 50%, this 1961 number that we gapped down from, wasn't an accident. If you go back and you do the measurement, it's fascinating for somebody like me. But if you go back and do the measurement from previous bottom to previous top, you find that the middle is actually right at like $64, like on the dot, basically. And the $64 mark, if you look at the chart, is right where we broke out. It makes sense. It's right where we broke out in the June run-up. If you do the 236 or the, what was it, 226.36 move, whichever it was, it gives you 1961. Well, 1961 is the level that kept coming up back here as the gap through level, right? And it's also the shifted value of this. This is the same value is what I'm trying to say. Now, it makes sense because we did kind of gap through some values and this and that. And when this backs up, it comes back up to this in this region right here. This is where it popped right here when it went up. Remember, in extended hours. So it all kind of jives really well because the shift values are equivalent, obviously, from here down and then here down. But it's fascinating how like perfect it is. So like this is a basic new 50% marker in essence at 1961. Anyways, I went through and I did the measurements again based on certain shift things. And that's where I think 316 came up. And I was like, that's pretty interesting. That's been the value that's being used as like an anchor of sorts. Now, if we go for like a macro spring, a bigger picture spring, and we dump down to like the $2 area, I still don't think it's a problem. You might think that's a huge issue. I don't think it's a problem, but here's what I would expect, okay? And I'm gonna lay it out here as simply as I can say it. All right. If on earnings, for whatever reason, let's say on earnings there's a beat, and that's on the 11th. If on earnings it just suddenly takes off, I would be highly skeptical, especially if it came back over the top or back over this creek right here. Like, I would be highly skeptical that that is actually running. But it's up. Green is good, right? You've avoided going down. So why can't we just keep avoiding going down? Just LPS, LPS, LPS. No spring. Remember, we avoided it here as well. We didn't go to the low here. We came back up. But even at that time, I was suggesting like that could be just a setup for a spring down. In fact, I said it's probably likely that that's a setup for a spring down. Do the measurement, right, from the top here through 316, and you see it's like a full 50%. It's like perfect, right? Back down to 246. Why would you do that? Don't know. Why would you make that like a perfect move, you know? Well, you're establishing that this is a range, right, around this 316, but you're giving yourself all the space that you need to kind of devise any kind of a distribution you might need. And remember, like we were thinking that if this were distributive, what we would probably expect to see was this is like a cat ear 1, right? And then this is going into a cat ear 2. And a cat ear 2 is always iterative. It's always going to look kind of like the same thing. This is not that different. Like this would be your cat ear 1, and then this would be your cat ear 2, and this would be your cat ear 1. Oh, you're starting to see the pattern? Yeah. So the problem is if at some point during this sequence, one of these cat ears goes high before it makes a spring, we haven't seen a spring on any level yet. If one of them goes high and breaks the mold before we make a spring, there's only one of two options. Either everything has been an LPS, in which case your operator is really pulling the wool over your eyes because he's basically saying that all this previous weakness and all this other dips, we're just not going to go for it. It's totally possible, but it's usually not likely, like especially for an AMC. So either they're going to just take off and go, in which case this has to make a support then above this trend at like 350. It's not impossible. If this just runs up, hits the top here, it could just go. But you know what would be really diabolical would be to distribute over the top, make everybody think it's going to go, right? By pushing too high, showing weakness, and then basically doing like a little mini cat ear and then dumping, which is more typical of what we see when AMC gets to the end of the ear is we often get like an upthrust at the end that goes over liquidity, finds that the liquidity test is fine. You get buyers, but then you pull the rug really hard. And that's just the end of a cat ear sequence. Like it's no different than if you look back at any other one, but the easiest one is always, I mean, I think it's the easiest one to see it, is this guy. This has to be like the easiest cat ear to read in the universe because it's it's the exact same problem, right? Of like, we're going to just build out and build out and build out and just keeps doing the same thing like over and over and over again. And it does have this moment of like, oh, we're going to keep going up, you know, like this is going to happen, right? And it makes you think that there's going to be this advancement because of this early break that's trying to like break out. And there's a sense in which it's jumping a creek, right? It's presented to you as this like bullish thing, like it's going to go, but it doesn't. Why not? Because they're selling into essentially weak hands. That's the idea of distribution, right? And this sense of like, okay, well, how can you tell? Look, all I'm saying is that traditionally, when this starts happening, I'm always like really careful of what I'm looking at, because you will see 1, 2, 3, 4. You'll see one, you know what I mean? Like 1, 2, 3, 4. You'll see all the same things that you see on a breakout. But the problem will be that like it will advance early, but then not continue the advancement. So you'll end up with what's like constant like T's, and then it just doesn't go. And a rug pulls the other way. Now in this case, this was macro distribution. Like this was at a top. This is not what we're talking about right now. It's probably more similar to, again, looking at something like this, where you have 1, 2, 3, 4, 1, 2, 3. It's like the same ideas, but you're doing it on a accumulation scale, right? We're refusing to go down to all-time lows, and we keep pushing up. And we're going to make these early advancements that look like you're going to go, but we're not going to go. And that's what you see here in like these creek pushes, like these early pushes, but it just fails to go. Eventually, it just stops right here. You can see the marker, and that's the drop down moment. And that's the same thing that you get here in the end. When you look at the end of it, and you see like eventually it just stops. Like it stops trying to kind of hoodwink you. I would even put it back here, into thinking it's going to go, right? And it just kind of fails to advance, and then it goes the other way. And it usually it results in a drop of some rising creek. This also happened in this example down here, though I didn't use it as the example that I just gave you. This is the one that had the same exact effect, right? You makes you think at the end it's going to go, but then it just reverses and goes the other way. It's a reversal of the sell test idea. It's like a buy test idea in some ways, okay? So it's the opposite of a spring. Again, I would suggest to you, and I can't know the future, but I would suggest to you, if that at earnings, you see this kind of pop and it hasn't made another low, like if it makes a low between now and earnings, which is coming up next Monday, if it makes a low between now and earnings, like this conversation changes, because we could say, well, maybe it already did the spring. Yeah, totally possible. If it doesn't, and you just see this hook, but the hook continues to run up and it doesn't stop at 317. It doesn't create a lower distribution. It doesn't start to drive the price down into a spring, but instead it just races up to the top. Just be very, very careful. That's all I can say. And I'm being as straightforward as I can, because in that situation, like it could be a really big looking move. Like this thing could be gapping up to like 450 or something, and it would look amazing, and then it would just slide. And you're like waiting to see if it catches, and then it goes too low, and you're like, well, maybe it'll still run, right? Like this could be like this kind of a motion right here, right? Where there's this massive gap up or something. Just be really careful about that, because that kind of garbage happens when they're selling it. They're about to sell off. Well, there'd have to be some bad news that causes that. I don't know, man. Earnings season has been a bunch of garbage. The beats have been met with a lot of sell-off and a lot of volatility. So I would not be surprised to see it on AMC if I see it on major tickers like Google and all this other stuff, okay, which had pretty decent sizable drop after earnings, even though it double beat and had a ridiculously good earnings. Yeah, there's all these reasons people come up with, but it's like, really a lot of it's just profit taking. And ultimately, like what they're going to do is do a sell test. And some of them are going to pass that test. AMC could pass the sell test if it held up support, right? That's what we were just saying. But I don't know if that's very likely. So I would be extremely cautious if you see some kind of a weird pop here. It could be technically as low as like 350, because there's a secondary creek right here locally. But I would expect it more likely to be like 360 plus. So that'd be more likely. So if it only goes to like 320, I would say 330 even, that's fine. That's not a problem. It's still within that wedge. It hasn't made a higher high. It hasn't tried to push resistance. Who cares? Then expect a creek to be, or a downward motion to be positive. That would be a spring. If it pumps up, though, beware of the bull trap, is what I'm trying to say. So this is a far better scenario for us where it drops early because you don't have to worry about that. Or it drops at these earnings because then it's like, okay, well, I kind of feel like this is expected and I know what's going to happen next. Then you'd have to watch for like a major spring. And in some ways, I kind of wonder if it does this pop, it's more likely it's going to go low. Whereas if it does the lower move, it's more likely, like it only goes to 320. It seems like then it would be more likely that it's probably, or I'd say it's more possible that it doesn't even go down below 246. And if it does, it just barely does. It's possible that this could stop short at like 257, which is sort of where I'm eyeballing it right now. Because that's one of the major trend lines here. It would be like a back test here, and then it would just run. And that would be a local spring for this little reaccumulation range right here, but it would not be like a macro spring for the full. It would be like a macro LPS. I think if you're going to get a macro spring, it's definitely a possibility. It feels more possible, I should say. More probable. That's a better word. Possible makes it sound like it's guessing. Probable really has more to do with statistics and what you've seen in the past. It just seems more probable that if it pumps up and does some kind of crazy stunt like this, you're likely going to see it do a reversal of like equal proportion around 316. I think this is the kind of stuff that could dump you down through a range and cause you to have to come really low. And it may not be lower than 246 by much. Remember, at this point, that's another spring zone here. You've established like multiple possibilities. We don't really have a phase B bottom yet, but we're about to get one. You've established like multiple possibilities here for like where that little dip could go. It'd be like 280s down to 260s. It could be 246 to 239, or it could be below 239, which is like more of a macro spring. Does that make sense? I think each of these areas, in essence, could act as that liquidity test, that strength test that we need. And it would make sense to me. But I'm definitely eyeballing the possibility that earnings kind of pulls the wool over our eyes and goes up early. So that's something to be careful about, just in case you're wondering, like, oh, it's running, should I buy it? Well, I can't tell you what to do, but I would definitely say that this would have to show strength right here at 350 and then continue. Otherwise, if it slides back through, you're in big trouble, you know? Again, I think it's more likely we're going to see a pop, maybe come up to like 320 and then fail. And then after that, we should head low and get our dip. This would be a really good scenario for us going into next week. To be up at like 320 and then drop, have a rug pull moment. I think you'd have a really great buy-in moment, in my opinion. I don't foresee this going on indefinitely. I think Stockfather did a video and he showed like a really long phase B. I'm not seeing it. I disagree because I think that this on the big picture, I understand where he's going with that. I think on the big picture, this is like those other setups that we've seen where you're really hitting those marks. And I don't see it as separate from those models. So like I see this as a very likely bottom that's just going to break out and go. We've seen this before on AMC. I think we're going to see it again. So that's the way I'm looking at it. I'm not looking at it maybe through the lens that he is of like this is being a potential long-term setup. But you know, what happens if this pumps up, hits a low, and then bounces, you know, or if it drops early before pumping up, like none of these happen. It just dumps. Well, yeah. Then we have to have a new conversation. Changes. Order of operations is really important in this case. But I'm very skeptical of that idea only because I'm not really sure what else to make of it. You know, like what else would you look for? If this pumps up, I'd almost be like we never made that last move, and I'd have to see this as like a really long term, sort of like this, like a really long term sell down period, you know? And I just don't know what to make of that right now. It'd be kind of crazy. So we'll see. I think it's less likely based on what we've seen with timing here. But I certainly could understand, especially given what I just said, if this is like August, well, in September, August, September, that's where you have AMC peaking again, and then it drops. It takes a really long time to come down to a spring. But I think we've already done all that, so I don't know why you do that again. It doesn't make any sense to me. That's like repeating the same thing, and I just don't get that. Like, we've already done that. We already did this reaction, and then we came back down. We've already done the backup reaction, and then we've come back down. Like, it's just looking for the big spring, in my opinion. I think it should be done after that. And everything else would be bad, like distributive, So I can't see anything else being particularly positive right there. Like, why would you go sideways longer? I don't know. It's not impossible. It's just not what I'm expecting. And I count iterations. I'm a weirdo, right? So I don't think he does, but he's looking at the range as it is. So we're really at the moment. I mean, it sounds kind of crazy. And then someone asked about GME, like, what's GME doing? I said previously that if GME follows this S curve down, it's kind of already in the right pocket. It could come down as low as that gap, fill it, and then it's done. We don't know what we don't know. Right now, all we can see is that it definitely has some resistance on that previous support that was being used right here. And the rest is just a question mark. That's not helpful. No, but this is the strength test. You can see it consolidated right around where we are right this second at 2230. That's where that candle was right here, that dipped low. You might expect to see another low. There's really no telling. This looks pretty much in line with expectations, though, from what we talked about like last week. It came down, like, it may be a little hard to see, but that's where the marker is. It's right there. So it's back testing that major. I call it a cross. I wouldn't call this a creek per se, but it is back testing it. That's the direction it goes if it breaks down. It's kind of a bummer because it's literally the opposite of the S curve. But it is what it is. On a bigger picture, because of the M going down, it does change some of the timing elements. And I think that I haven't really had any time to get into that just yet. So once that happens and you come back and you look at where does that mid-cross actually reside, and I couldn't be 100%, but it looks like right here on July 11th. So that would anticipate, like, I'm just kind of eyeballing it right this second. I would anticipate then it'd be done by the 6th, which again correlates to what we just said on SPY. Like, this could end up resolving by Wednesday. So that's certainly the same time frame. Well, isn't this like dropping beneath a bunch of other stuff? Yeah, that's the crazy thing about this. So if you look at the big picture, it is a strength test, even though it doesn't feel like a huge one. It feels really small locally. Like, it hasn't made a lower low. So you're like, how is that a strength test? I mean, you don't see it. I don't get it. Why would that be a sell test? This is where, again, I differ from. This isn't particularly like what I would say is Wyckoff, but like, I would look at this and suggest to you that no, it definitely is. If you go back and you look at these parallels, this is the lowest one. Like, we're sitting right on it right here. I don't see another one below it in terms of these parallels. I think these parallels are correct. Now, somebody else might look at it and say, well, I think you're wrong. That changes the conversation. But this is what I think is correct. So if I'm looking at this and I'm looking at this thinking that that's checking it right here and trying to advance, but it's not advancing just yet, this certainly looks like a strength test to me. It's pushing through that dotted line. So I think this already is in that kind of a selling period, a sell test period. Now, previously, we've had another one, which was a trend check back here that happened with some weakness in April. And I said that before, like, that didn't look particularly strong coming back down and making a lower low there. but it did rebound, of course, and make a higher high. And then we have this widening factor to consider. Like this could end up continuing that widening. If you puncture this, what's to prevent you from just hooking and dropping? Nothing, right? Nothing. And it's oddly exactly the same in some ways as AMC, weirdly enough. So like in some, and you guys are like, well, I don't get that. Well, listen, if this is the motion right here, right? So if on the 6th going into like the Monday, you get this run up and then it drops back down, that's just a hook. That's no different than what we're talking about in some ways locally, no matter what happens here, right? Like this could be a macro big picture like distribution motion that drops, or it could be a little tiny one that drops. And then you start the real sell test, like the one that's going to either capitulate it and drop it low or not. When this goes down, do I think it necessarily goes to a new low? Well, no. And interestingly, again, looking backwards at like where these supports are, you've got supports around 2080 and 2037 that were built out coming up, to the upside. There's multiple other ones here we could use. The big one that a lot of people have been looking at is that 1780 mark. But even just this right here, again, locally looking at this, you're like, well, it could just dip below 22, right? Yeah. That could be a spring motion. So it's becomes like the same exact question in my mind. I'm like, yeah, that could totally be like the same motion right there. Like it's no different. It's just a different, the way it's set up is a little bit different in terms of like the numbers and where it goes and what happens after. And it may not be 1-to-1. We don't know. Well, we don't know. But that's the creek level right there. That doesn't surprise me at all that what we're experiencing then, and if you look back at the drop ledge, there's a little gap right here. Look at where that gap is. It's like a perfect coordination to get you right back up to where this intersects both the rising trend that was lost and the falling trend that was lost. That's the intersection right there. Is right where that little gap is, right where the drop ledge was set up. So I look at that and I'm like, yeah, that's the key moment right there. So is it possible this kind of builds out and does have a breakout moment, but still goes down? Sure. And that's probably where it would happen. In the event it doesn't even get there, same deal, right? Okay. It doesn't get there, but it gets pretty close. Doesn't really make a difference. In the event that it comes above, it's the same thing as AMC. You have a potential here that this is it. It's done. It just keeps going. But you also have this potential of like, really just seeing like a really nice, like nasty upthrust kind of moment. And if it comes above here and then fails to advance, it's kind of the same deal. You're inviting for that reversal motion to kind of drop you down below the floor. So I could certainly see why you might be a little bit like confused thinking that they're completely different. They're really not. If you think they're completely different, I don't agree. Like they're not completely different at all. The setup's in the same exact kind of precarious situation, Well, what if we're wrong and it just dumps on earnings? I don't know. That's not a situation I have on this chart. Is it possible? Because it is curving out. What about the famous curtain drop where it curves out and it doesn't have an upthrust? This is why you have to watch local areas. Like I was saying on AMC, it could be that this is curling out and has like a local upthrust, like it pushes up high and just fails to continue. That would probably be before earnings though. Like it'd be this week, because I can't really see this doing that way over here. It'd already be down really low at 260 by then if it doesn't break this little trend down. So right now, like the trend down is right overhead. Maybe I've got a little bit too much room, but yeah, it's like right here. That's different though. That's like a local upthrust or something. Like that happens and you have to just kind of watch the bottom. and see where it goes. So could that be the case here? Sure, but that's before earnings. And then we'd have, again, we'll be back, we'll talk about it. But that's a different setup. It hasn't happened yet, so we don't know. Maybe they both happen. Yeah, maybe. I don't care. It almost doesn't matter. So the question of like on GME, like, well, what if it doesn't even go up that high and it just pops here and then drops? Well, so what? I mean, it did do that today. It hit the stop right here. It already kind of hit a top. You know, even if it held high and then popped again, it could certainly have a dump, you know, leading up to the 11th. What we're saying about this idea of Wednesday is that there's a pretty clear indication that there's a bit of a timeline there, and you have at least some sense of an early deadline for a potential pop there. And what would happen after, I couldn't guarantee. Like, if it holds, fine. If it doesn't, fine. Like, that's it. That seems very likely to me. If it does it early, it could be extremely fast. Like, you could gap up tomorrow to 23.10 and then just start sliding, and that would be it. That's the curtain rod drop, you know. So where we are now, what you really want to see, I guess if I had to pick, like, hey, all right, you're telling me all this bad stuff, I play it contrary. I like to see like what could happen in a negative situation if I want the stock to go positive. Okay, that's the way I like to look at it. In a positive situation, you can kind of already tell this is just a widening spread. I don't really think that this is probably not the best way to do this, but there is one that goes way high here. I suppose you could use that. I don't know. There's another one right there that might be a little better, like more realistic, this guy. This actually has 2 hits on the top. And this is just a sell down through to the bottom, but whatever. So this is an area that I might use and suggest that, yeah, this would be a good one to look at and consider this as a possible spring bottom. What would this potentially entail? If this is a dip, this is basically like your phase B top right here. You just create a phase B bottom. So another motion up might result in downside before Wednesday, you know. If it has a motion up here and it doesn't hold high with like an LPS, like this doesn't just hold up and then jump the creek and go, then you have a very similar kind of a spring bottom to a lot of AMCs, which are traditionally like, this is what you want to look for. It's like a big reaction off of a bottom, second top, low volume sell downs for the most part that just aren't going anywhere. And then you'd look for like a final spring moment here. And then this potentially still could make a lower low, but if it then pops up, you're in this kind of like gap up zone of let's go. This is okay. This is a little different. Again, we'd look at this in a different light than if it goes up first into Wednesday and then dumps. So just be mindful that the order here is very important. And then looking for those key support levels is like super important. And then also final little tidbit here on GME. It may not run the same as GME once it gets to that earnings bit. This setup right here would still look really bullish to me if it does something like this. Even if, yeah, and it would probably be on the outside of this guy here. That's where the hook would be. So it may be lower than that. Be like that. It should be like this. Sorry. Because that's already got a bottom on it. That would be the drop. And then you'd have a jump over probably this creek. I guess they've already made it. So we don't need to make a new one. And that, again, this is a spring. So if it doesn't make a spring, it may not go lower. It could hold a higher low right here and just go again. That's where that would be. So that makes sense. So even if you do see the same thing up to the point of maybe Wednesday or then going into earnings, that's still an area like I'd be really cautious about. AMC and GME do not always share in the same kind of upside momentum. And I'm curious if even if AMC does go down for a spring into late August, and it's like a late bloomer, I do wonder if GME is already out and advancing. So I'm curious about this too, because GME earnings coming up in September is kind of like it's weird. It's like September 3rd, right? Or something like that, around that time period. That's very similar to what we were just talking about on SPY, like raising up into end of August, the 31st. So wouldn't it surprise me to see, frankly, to see GME just take off early and start walking out going into the 22nd, maybe already be way up here. And I already have this on the chart. I guess I don't need to draw it again, right? But like being all the way at the top and already in like an SOS moment while AMC is down in a spring. And this is really running up into, potentially into the earnings report time period, would not surprise me at all. While AMC may have to take a little bit of a dip down before catching up. So just keep that in mind. Like, I would not be surprised. Time period wise, if we're right about this, and I'm never 1,000% sure about anything, but if we're right about it and it starts running around the 22nd of August, if you look at the estimation that we did with ratios, we said about 12 bars. It puts you right at, it's crazy, it puts you right at September 3rd, which is kind of insane, which is where GME earnings would be, right? That rough time period. That September 3rd is also suspiciously close to where we expect maybe a market top if we see like a repeat of that COVID model and just burns up August to the upside and then has a bigger pullback later. To some degree, there's a similarity there, okay? Not one-to-one. So I'd be curious about that, because I would wonder at some point if that were to occur. I'm going to make this look right. This is like way off. If that were to occur, then I'm wondering if we actually kind of run up into GME earnings and then drop. And GME earnings is really just a catalyst for down at that point. Like, it's sort of the corrective measure. It's already elevated. So those are things that I think you have to look at on a big picture scale and say, this is pretty consistent or this is not consistent, and then just make a judgment call on what you think timing wise that might be. But I do think this makes sense. Either one of these would make sense to me. So I'm like, down or up, it have to show certain signs, but I do think that GME being up, even running up into the third, I mean, I could certainly see it as a possibility, or a high possibility that happens. That does bring into question some other things that I don't really want to question right now, but like whether or not AMC has a second run versus GME, things like that. I don't know. I'll tell you right now, if it only goes to like 10 to 12 or $10 or $7 or something like that, then I'm probably going to kind of fall back on that idea that AMC is really going to wait for a second run. But then if that's true, GME may not have a second run, right? So it's like, if the peak and the pinnacle there really is $50 or $60 and it's not the top, that does bring a lot of question marks in. I don't know. Every time could be different. This is the right place to be at the right time for GME to continue. It certainly is. But it does make me wonder if it has like some kind of, and we talked about this before, like a second move in that just kind of comes back to the same spot. And then we rinse and repeat, right? The cycle that we've been kind of moving through. I don't know. I don't know yet. I haven't really decided. So we went through those on the other day on GME. So just kind of repeating the same thing. But anyways, so do I think this is bad? No. To me, it looks like it's an iterative motion. You see the M shape here, the M shape here. There's a simple, like, kind of repetition of pattern, and we're starting to see the same thing right there. So I would expect it to repeat and drop again one more time. And then if it doesn't, it's a change of character. This to me already looks like the M forming down. I don't know, man. It's going to be crazy if this happens. It could be a huge, huge, huge bullish move. Like, soon. And GME, again, it may start going and like work its way out and look kind of boring until about the mid-August time period. Then it just kind of explodes. Yeah, I wouldn't be surprised to see it kind of slowly build out and then all of a sudden it's just really going. AMC is a little different. I kind of want to see the spring, but I digress. So that's kind of all I got for AMC and GME today. I don't really have anything else to say about it. If you're only here for that, then that's all I got. Jason's been talking about PHH. We're going to check that out. That was one that we looked at that we had a pretty good setup for. Yeah, I'm seeing this all across the market though, guys. There's this kind of, Apple's got it too. There's this kind of like nasty drop, like a sell test just happened. But then I'm really curious, like if this reaction yields a proper spring bottom, we could be in for like a massive market reversal moment. I think I didn't want to talk too much about Apple, but I think with Apple, I looked back and I was like really upset at first. But then I thought, well, it doesn't really matter. I have pretty long dated calls. I was upset at first to see this huge drop. But I went back and I looked and I was like, there's not really almost any earnings where it doesn't drop. Apple like drops almost every time in the last few years out around earnings. Like 4 out of 5 times there's a drop around earnings in the last year. And I was like, well, that's quite a bit. And then what I've noticed is that by the dividend date, it's built out into a bullish run-up. So it's like on the times that it's dropped on a bullish beat on earnings, it goes into oversold territory around that time period. But there's you can see it like on the chart, there's a build out into the dividend. And then once that dividend, so it's either at the same price at the dividend that it dropped from, or it's like built a bottom. So on every single other time that it's had that drop at earnings, the dividend date has been really important. That's Monday the 11th. We just talked about that. So like, I'm not saying AMC's 1-to-1 with everything, but it is curious to see that because I was like, that would imply that if you're going to hit a dip, you might get to a spring before then, and or you might get back up to where you were before. Around that drop period, which would be around 210. And then it just has continuation. So it's kind of a curiosity of mine. I know it's a different time. Every time matters. But I found that to be kind of interesting. So before we show PHH, I wanted to talk about that real quick. Because that would imply, and again, that everything is kind of coming down. Like we were saying with Tesla and with GME, like all of them look the same. They're all kind of like just testing the downside here. They've got this interesting build out that reminds me of a spring motion. There's really low volume in the sell downs. We haven't seen a direction picked yet, but you definitely haven't seen a breakout, but you haven't seen a full breakdown. It just reminds me of that iterative motion of that springs take. I'm very curious if this somehow flips around and becomes like a hyper bullish market and really takes off going into August. And if it does, then we called this sucker out like a long time ago, albeit not on every stock. We were just talking about a few that we really looked at that we were saying August looked like a key time frame for a while, which is pretty cool. Yeah, this is gone. It's already like I missed it completely. Good for you if you got in it. So it dropped really low. It went lower than I expected. I expected maybe 70 cents. It came all the way down to 65. But then I did have a 60 cent as like a possible low. And then I said right here, when it gets above 72, that's really the buy zone. And you would buy it up to from 72 up to 86. So right now it's already above that previous resistance. It's kind of coming up to the next one. There's one right below it. That was a weakness, but it's above that. But then you look at the next guy, there's a resistance here. And that's not gotten there yet. So the next level is 82. Honestly, if I had bought in, and I didn't, but if I had bought at 71 cents and just held it, I'd probably already be out. Like 15% is a good gain. I do not anticipate it going, because this is a wrap, I don't anticipate it going above 86. The only evidence that we have that it might do that is that this dumped lower than the channel. So that does give you some idea that there could be a massive swing here above the channel, if that makes sense. May not, but I'll show you what I mean. Let me do a different kind of measure here. If you use a logarithmic chart and you measure with boxes, then you're really looking at percentages. Boxes are just holding that percentage. So it might seem a little bit silly, but it's just a place marker. It's the same as drawing this thing. Yeah, that's about as far as I think you would take it on that angle. I'm not really seeing any reason why you'd come to 96 cents. Maybe $1 is what's in view. 96 seems a bit odd, specific. But this is one of those things where, like, yeah, like it'd come to 99 cents or something and retest $1, and they've given you a path to get there by doing this dump. It makes it feasible. Kind of expanded below, now you expand above. But that's a very bullish case for like a swing like that. I don't think it's likely going to come above $1 based on the setup. But who knows? I've been wrong about penny stock kind of trades before, so they can go kind of crazy sometimes if there's a squeeze moment. So yeah, I mean, if you think it's going to go to $1, and there's probably other ways to check those targets than what I'm doing, that's still 25% from here. But I think the swing that I was really looking at was this initial one, which is just here to here. So, like, I totally think it could stop short, maybe come a little bit above this, and then stop short at like 88 cents and come back down, and then break out again later and kind of do the same thing. So there's no one size fits all for this motion. Like I wouldn't, or I couldn't guarantee anything. I don't remember P-Ticks. I don't remember that one. Yeah, we talked about this and this setup having this kind of sideways that then drops and then reacts really strong. It hasn't gotten as low as I would have preferred. See how time gets away from me here. Weirdly, though, it did jump over. That's really strange. I would have expected that jump would have resulted in a push-up, but then again, it didn't go down. So order of operations is like super important in these tickers. Like, got to pay attention, because like if you didn't understand why that mattered, like why this sell test mattered, then you'd probably think this was a breakout because it came across the creek. But the problem is it like never came below. It just didn't ever make that dip. And I didn't have a scenario where it didn't make that dip for a reason, because I was like, well, it's made the dip every time. So like, why would it not do it here? It's clearly like a pattern that's being used. So there's kind of a danger in assuming that a setup is gold, like, oh, it's going to go now, because he said when it jumps over here, it's going to go. But I didn't say that. I said if it's got to go down, then do that. It's really important. It's like the mathematical equations, and you have to do parentheses first, you know? Well, it's a plus sign, so it should have been added. Yeah, but it's in the parentheses. Like, you got to do this other operation first. Otherwise, it doesn't work. So like I have targets down here. I'm going to leave them, the lines. I'm going to get rid of this other stuff. This never did it though. It stayed really high up. And now it's finally like crossed down here and it's back in the channel again. I don't think this is necessarily done downside. You know, we were kind of estimating based on certain things where that might be, but we didn't have this full build out, so now it's been a little while. Yeah, this is kind of a tough one because I would normally use a trend that doesn't seem to exist here. Like it's not going towards this trend. It's just penny stock stuff. Each time it's like directionally heading towards it, but it never gets to it. So it's complicated. A little convoluted. It's this guy, I think, right here. See when this crosses up and over and then it distributes off to the side and then it starts to drop. That's it. But it doesn't ever get to it. So you can't use that as a... You can't really use that as a guide since it doesn't get to it. It does get here. So that works. This sign of weakness definitely goes below that. So I'm going to say that the buy zone here, while it's not like far away, this is a weird one because it doesn't even have like a... Doesn't even have like a consistent breakout either. This breaks out here, which is fine. You can see the test back goes pretty low. This one doesn't actually come back down again, I don't think. It just goes. It does push up though. I guess the best way to do it would not be with a low. I know that people like to catch the knives, but probably the best way would not be to guess the low, but to really look at the breakout on the high. So the consistency comes in the advancement. Not in the bottoms. The bottoms are really inconsistent. This is the advancement right here. This is the advancement right here. This is the advancement right here. This one's really weak. I was just trying to say, like, it's kind of odd because this one's like super weak. It doesn't actually, it goes above it, but it doesn't hold above it. It just takes off. The others actually held above it and then took off. So makes it pretty easy. So we don't have to guess lows. It's just not gonna, I'm not sure that's gonna be fruitful. It's already oversold, so I mean, it could turn at any point. You could have an upthrust and another drop. Who knows? I would suggest that the best course of action would be to look at these two. These are your buy-in levels. So if you break over this one, that's like the first one. It's going to be kind of weak. But then the next one would be like the big push. Potentially it goes above that and just like stays above it like it did here. But because this is so wide, like these are the steeper ones and then there's like these wider ones. I think this is likely going to come back down. my opinion anyways. This comes down and like trades low. I don't know how this relates to earnings on the 19th. Maybe all of this already happens before then. Earnings is there. Earnings is there. So it could be either or. It could keep going down in earnings or it could already be up. But in both cases, it is around earnings when this thing breaks out. And then I'd be really cautious from there. I mean, I hesitate to say it goes all the way up here. That's too high. I would suggest that everything and anything, and these are like 4-hour candles. This is very short time periods. Pretty much anything and everything above 560 is probably game if it goes there. Yeah. Like these are decent indicators, but they're not the best. None of them hit it like perfectly. They're pretty close. The previous trends. So that would be this one. That's quite a large uptrend, but yeah, I mean this is pretty decent. I don't know. The way these things layer doesn't take into account what's going on the big picture with the stock. Like this could be a higher low that's going into a bottom because you can see previously like over here at 271, like it could be like a triple bottom where there's a retest. One, up, down, bounce, up. That is the nice pattern that we look for right there. It's just ugly. See that? There it is. I think a shares only position here makes sense and just waiting it out. And if it doesn't run around earnings, then you're in trouble. But you could obviously have a stop loss and just not let it go beneath where you buy in. You're really buying in low right now, but then you could just wait, and once it breaks out, you set a stop if it comes back below. Well, that's what I'm trying to see. I mean, these moves are ridiculous. They happen like really fast. I'm not really sure I get it. It's more distributive action than anything else. What I worry about is that this might be the height, and like I'm kind of showing it as if this is going to go right back up again, but this could be like the pinnacle move. Sometimes you get this like really extended 1, 2, 3, and then the last one's kind of weak because the buying power is done. You know, and the sellers are maybe a little bit eager here. I'm not sure. Plus you had the split. And then you could just be a smart person and just trade till it's over, no matter what, just trade till it's oversold. It seems to have done the same thing every time. So it may be a little weaker, but 1, 2, 3, and then 4. And 4 is kind of weak. So usually there's a reason for that, but yeah. So maybe if this came up, but it was only at $5, then you just you say, all right, well, I made the trade, I'm done. No matter what happens. I'm trying to see where that edge is, and it's hard for me to gauge. I can't really tell. I think I'm right, but that it's like right around here. So this does make sense for a September, an August run-up, like a sort of a big motion. But the other thing is like what might be the goal. I don't know on the big picture. It's probably this one that was already hit again. Like, so like, why would you need to go beyond that? I have no real reason. So from the 19th onward, yeah, you might have like a single one move, like around the 20th or something, that just goes all the way up to like $12, $13 if you're lucky. The reality is, to me anyways, I think the distribution was really happening from 5 all the way up. So 530 up. And most of these I can see look like right around 740. Yeah, there's another one right there. That one's really important. This one. So without going like way crazy detailed on it beyond that. Again, maybe this is like ready to go right at earnings. So it's a really quick like pop, but I'm thinking it's going to try to go for like, yeah, you said 12. That actually looks right. There's a little gap right there. It's like a UTAD. Like it could, like I said, it could be a bottom, but I just don't see why you would keep going. I'm trying to figure out what the heck's going on with this chart. It's a really strange chart. There's a bit of a widening going on. I suppose that's been a big part of this. But even like the peak of this is really only at like 12. So sometimes with a UTAD, there's like a secondary move. It tends to be a longer distribution. So there could even be like a second move here. That kind of like coils it up. And that happens. It's not like this hasn't happened before. That's the same thing that happened up here. Just longer periods of distribution as opposed to just a single up thrust. So I would kind of wonder about that, this timing. And then kind of a correction back into November or something like that. I don't know. That's kind of guesswork on my part. I really don't know. But this, yeah, I mean, you can see it's a good buy. It's down here around bottom. Like, I mean, it's hard to say with the split, but it looks like it could be a good opportunity to run from where it is up to, it's a 300% move. I covered SPY like early in the stream. It's basically in a macro widening that could have a big run into August. And if it doesn't run into August, I don't expect much until, like much except sideways until maybe November. And if it does run up into August, it's probably going to sell back down pretty hard. So, and not in a bad way, just going to be a bigger correction after. Yeah, I mean, it's pretty easy to tell. Seems to be working its way into earnings. It should have it worked out around earnings. Even if it came lower, you can see that pocket. It's running out of space here. So, yeah, maybe 300%. I mean, it's a big move. So, it certainly is a possibility. I just be careful, you know. These kind of things these tickers are they're really hard to gauge. They really are. And there's other trajectories here. Like there's a pretty low one way out here. So it's just one of those situations where you can't really take things for granted. You know, you could get an advancement here that's actually quite healthy that doesn't quite go as far. Like it could go to like 530, you know. That's what I was saying. That motion right there is a very tricky one. And even later, you might say, well, that's garbage. You know, I don't want that to happen. Yeah, but, you know, later on, like that could still build out if this is strong enough. I could still build into something like half decent later on. So it's not that different when we talk about SPY. Like one of these is a big move up into the end of August that then has like a pretty deep corrective phase, whereas the other is more sideways and then goes up later. And both of those seem very realistic to me. So better as a shares only probably position. Or if you're going to trade like options, you trade and you let it go and you see if there's a gap up. And whenever it just kind of stops and has the pullback, you just say, all right, I'm done. Just take your whatever profit. Don't worry about what you don't get. Especially if it stopped like here around 550. Yeah, that wouldn't surprise me. It seems like a lot of chop right here around threes. So if you're able to trade in like a high liquid zone while you're waiting for some bigger move, then it's usually a good bet that that's what they're going to do. And this also brings into question like a bigger cat ear if it does this, because then you have the possibility of like 1, 2, and you're really then still going to go down. And this is really like a spring, essentially. Push up and then a big sell test down later on, maybe in like November. Let's try to see if you can drop it low. That's why I'm cautious, because like this would suggest that, yeah, it just goes up if it's like the other times. But I do wonder, it could be very simple, like push up to 5 and then trade across till, you know, September, October, do your sell test, liquidity test going into like November or December or something like that. And then by November, you're kind of ready to go. And then you're just basically coming back up later instead of earlier. And it's no different. Like, I feel like it's kind of the same thing, you know? Like, this provides you with a bottom that then you just come up over here instead of here. So, these are a bit difficult. These kind of ticker moves. Let's see, 31.85. $32.8. So meet in the middle at like 32 degrees. And it might give you a sense of like continuity that maybe once this hits the bottom, this takes a route at like 32 degrees. So that's even farther. That's like over here in April. March, April. It's a rough estimate. There's your February. If you go to the next one over. So this could be like $12 in like February, you know. Take a long time. So be careful with this one. You don't want to be holding this from 5 down to like $2. I think that would be bad. I'm curious what that valuation is. Not sure why I picked that number. It's weirdly similar to AMC in that regard. That's a 190 number to 530. Using this as the middle at 326. Which seems like the right middle. I mean, you can see it's been used through the whole time period. Like liquidity middle. It's actually pretty straightforward in that regard. This actually seems like a really strong setup. At first I thought it looked kind of weak because like, why would it do all that and then like fail? But then I was thinking about how in the end, if it does that, it means that it's failing to come back down. And really, if you think about this as like a 1, 2, 3 hit, then this would just be like a back test to try, like a sell test to try to get back down to like $1. The dollar is on this trend down. $1 is in January on the 12th. So it's like if you're testing it and you're going high to like endless shorts, you keep pushing it lower and lower and lower. This would be like a secondary distribution act off the first one here that kind of runs with the market. And then if it holds up, and I think it'd probably look worse than I made it look, because this thing's really choppy. But I'm curious, because I kind of wonder at that point if you're really looking at this more through the lens of, like, it's just trying to get down to $1 again. In which case, any distribution here above 5 might be adequate. That's probably like the mid-range of the widening. But the reason I said that looks really strong is because, ooh, look at that. Yeah, that's like the $5 mark. The reason I said that looks really strong is because if it then held up and jumped back above, its potential there is really big, because if it fails to go low this time, like the valuation's appropriate and everybody thinks it's worth buying up now, then really it's a 1, 2, 3 with a failure to come down for the 4th. So there's a potential longer term maybe to build out higher up if that happens. So longer term, that gives you a lot more space to sort of prove a new bottom. Now you have like a potential uptrend. That could take a long time, years, but doesn't have to be like right away. But just thinking about it critically, like if it avoids going down there this time, it's a little different because it's already made 3 hits. So it's made 3 hits here as well. Well, more than that, but you can see the pattern of 1, 2, and then 3. So yeah, there's potential here for a longer term trade as well. Not saying you should do it. I'm just looking at it. Curious if that would work out. Something to think about. This could end up being really strong. Of course, you know, the same thing applies, I guess, if it goes back up to like 12, is that if you do the 50-50 there, it goes back to like 1. That's like the same spot. So yeah, it goes to 1070, then it's got a bad, I guess there's a pretty nasty chance there if it distributes that it could have a really huge sell through finally. especially if it's a longer distribution where they load up on shorts. Like up top, then it becomes really dangerous. Because you could have a really nasty sell down back to like $1. And then you're kind of where you were before this split, probably. Where you're going to start doing like crazy stuff down here. You know what I mean? So it doesn't really put you in a great spot. But that's what I would do if I were an operator and I didn't want it to go up. I'd make a bunch of money in the short term and then just short the crap out of it. Still, no divergence on AMC on this bottom. Kind of bummed about that because I was hoping that there would be one. So if this does drop low, I forgot to mention, if this drops below 246, I'd be really interested to see if during that process, like let's say right here, there's a big buy-in, but it doesn't go too high and then it drops down and it sinks below 246. If like that occurs and you get this nice pop here and it goes, let's say it goes all the way back to the top and then this comes down and it's just barely oversold, but it comes down below 246. I'd be really interested to see if like, and it's more in this scenario, not the other one. This is the nasty one. More like this guy here. But you get what I'm saying. I have too many lines now. But if it goes up and then this like really hikes it up, but it doesn't go and then it drops, I do wonder. That could be a really powerful setup. So like you get this really nice buy-in or something on earnings and then it just keeps buying and buying, but it still drops afterwards. And you see the RSI like kind of peak here, but the price is dumping, you know, or whatever. That could be interesting because you could have a really fast sell down that looks really nasty, but then if it just barely came below, and this is a bit different as well, but then if it barely came below, I don't know. I'm just wondering, that's actually really good because I do want to see like a 4-hour divergence. I think that's really going to be ideal for a buy-in opportunity. So if this comes below and then your RSI is higher up, it looks to me like it's testing right here below, like a weakness of sorts. But I'd be curious to see if then it does it again. I don't know why I went to the wrong spot there. Does this go all the way back? It might. Hmm. 316. That's where it was. I think that's really interesting. Anyways, that would be really positive as well. We're not there yet. Well, you got a lot to chew on. I did a lot today. I'm going to take an early leave because I got some other stuff I want to do. And appreciate you guys hanging out. The overall setups here are fine. I just think we're either going to get a big August or we're not. And that's kind of unfortunate if we don't, because I think if we don't get a big August, and I'm talking about by the end of August, not like necessarily early, because AMC might go into a spring for much of August till like the 20th. So just keep that in mind. We're talking about potentially like 20 days of downside versus the 12 upside days, which would be huge in that spring scenario, roughly speaking, okay? But on the whole, if the market goes into a rally into August, then it doesn't really look good again until November. It's kind of a crappy market to be in. And yet, we're kind of at this place of, well, on the other hand, if you go into a kind of a cruddy time period, it does give you more time. It's very boring, but then you get a more explosive, probably going to get a more explosive winter. So it's a bit mixed. Yeah, I really do think it pretty much boils down to this. And I know both of these are going up. It could certainly make a lower low here, but it really boils down to this bottom, whether this becomes a new low or it stays as a higher low with the volume that it's got and pumps into August. We don't know yet. It hasn't happened to make a new low yet, but it goes into August pump versus like a topping motion here into September, a little bit weaker. And I don't know. Let's wait it out, I guess. We'll probably know by mid-August, so that's at least comforting. And I don't know if you guys saw the numbers, but the percentage chance went from like 30% to like 70% chance that they're going to cut rates in September. It's possible with the jobs data that they cut rates sooner. The irony being, of course, that our president is angry about the jobs and fired the data statistician leader who came up with the number because it makes him look bad. But on the other hand, he might get what he wants, which is rate cuts. So there's kind of an irony there. Like, why are you firing that dude? That's kind of what you want, right? I don't get it. He's like, no, I just want my economy to look like it's what I'm saying it is. He's been saying the economy is like super strong, and I think the economy is a mixed bag. I think there's parts of it that are like, sure, it's okay. And then there's parts of it that are like, nah, this ain't strong, And I would say that on the whole, employment hasn't been the strongest. I don't think it's been as strong as the numbers have implied at times. So I wasn't at all surprised that the revisions were so crazy, because I was like, yeah, I don't feel like the economy's that strong. They keep saying we're making all these jobs, but I'm finding more and more people are losing their job, like left and right, as cost of living goes up too. And I don't know, there's people that live in these bubble communities that they're like, well, nothing's wrong. Nothing's impacting me, so the economy is great. And I'm like, yeah, well, you don't live in like a food desert where you don't have access to affordable food, and the food prices have been increasing like crazy. For us anyways, it's been going up by like 20 to 30%. Our bills went up this year. We keep that data. You can say whatever you want about the economy. It's like, I don't care. The prices have been going up. Like, that's all there is to it. Gas prices are low. That's great, but that's about it. So I'm like really kind of confused. And then I've been running into more and more people who are like not in jobs, losing jobs, places shutting down. I think it's also industry specific. So maybe that's part of it too, is like, you can't really know if you're only exposed to one industry. You probably aren't aware of what other industries are dealing with, but so those job numbers is largely why we had this big drop. It wasn't actually because of the tariffs, in my opinion. I mean, partially, but that was the big whoa moment last week. And I didn't address it earlier in the stream because what is there to address, I'm going to fire this person that rigged the numbers to make the jobs look bad. But yeah, I don't know. I just think personally, I think it's kind of bogus. I would be more inclined to be upset with that person because the original estimate was so high. Like, a statistician shouldn't be that off. It happens like once in a blue moon. I get that. Like, where you have these like lurking variables that you don't see, and then all of a sudden something changes, and I get it. Statistics are not always perfectly predictable. I would have been more upset about that, like the original estimation, than I would about the low. I mean, it is what it is. Like, it's just data collecting. I do think it's dumb or dangerous to question data collecting like that and say it's a scam. But you say whatever you want, guys, but that's like it is like gaslighting 101. Is you basically come out and declare what you say is the truth immediately, and you try to convince other people that they're crazy for not believing it. And it's like, well, if he comes out and says it's a scam, now it casts doubt on everything that comes out of the government. And it's like, well, there you go. Well, I can't trust the government, so I guess I shouldn't trust you either. You know what I mean? That's how critical thinking works. But that's not the way this economy is. You guys are like, really? Really, Booksy? Philosophy? Yeah. If you tell me that I can't trust government numbers and that I can't trust the government, then why would I trust you if you're a part of the government? It doesn't make any sense. The good thing about being part libertarian is I already distrust the government from the get-go. So I'm not surprised when they make crap up on either side of the aisle or any part of the government. Because I'm like, yeah. They want to keep their jobs. They're like lemmings mixed with chameleons. People have such a short-term memory, you know. Whatever. The whole thing is just silly, like, to me. Like, I saw the revisions and I was like, whoa, that's a lot of difference. But it kind of makes more sense to me that they're lower. And I guess that means that Powell might reconsider. You know, his FOMC meeting didn't age very well very quickly. But then Trump, who should be getting what he wants to get now, which is probably expedited rate cuts, has this chip on his shoulder because it makes him look bad. Because he was saying that his tariffs were bringing in not just money, but jobs. Which, by the way, even if you believe that that's going to happen, even if you think like that's correct, which you're entitled to think that, and you may be right long term, I don't know. Even if you believed that that was right, you would, if you have any, semblance of sense, would understand that that would take a long time. Like, it would not happen in a 3 to 5 month period, And it's really funny to me because the last time the numbers were kind of bad, they just blamed Biden, But now they can't do that because the numbers are reflective of only a few months ago when the economy's been shifting around for 6 months plus. So it's like, you don't have a scapegoat. So the scapegoat is the data's bad. Well, great. But now here's what's going to happen. When the data's good, what's going to happen? He just said that the data was baked. So he strategically fires the person in charge. So one of two things is going to happen. I guarantee you. Mark this down. They're going to hire a new person, and the next time the data is good, he's going to say, this is the he said, she said of politics. He's going to say, the numbers are good because the scam artist is not there anymore. And this is the true nature of the market. Like, this is the true nature. So he's basically going to confirm himself. This is what's going to happen, okay? He's going to confirm himself the next time it goes on. And the thing is that if we lived in like a really truthful universe, it's entirely possible that scenario could be true, I guess. Like, it's possible that somebody rigged the numbers and then they replaced the person. But that's not the point here, because the point is that we don't know, because he didn't do anything. He just reactively fired them. They didn't check anything. We don't know. So now every bit of information that comes out, it will reinforce his firing. So if the numbers are bad, right, that's the only situation where he's going to have to say again that there's corruption at the highest levels and he'll go back and he'll double down, fire the next guy, right? Whatever, so on and so forth. If the numbers are good, then we fix the problem. And it has nothing to do with the numbers, it was just the person, right? It's going to confirm whatever it is that he initially said. That's how gaslighting works, by the way. If you're not sure what that term is, people use it the wrong way all the time. It is essentially like taking information and like turning it into if you do believe what I'm saying, it's basically like casting doubt on information that's out there in order to get you to believe what I want you to believe, essentially. And making the people that don't believe it seem like the ones that are really the crazy people, even if they're telling the truth. But it's interesting to think, like, if this were like 6 months ago, or 4 or 5 months ago even, 3 months ago even, he may have just pointed the finger at the previous president and said something like, well, the tariffs aren't coming into effect just yet, or whatever. The effect of these things aren't working out, blah, 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 blah. The real reason I think that he fired that guy is because he's been saying for months that the economy is strong. And I find that to also be ironic because he says that the economy is really strong, but then he blames Powell for not doing the right thing. And I'm like, if the economy is strong and inflation's under control, that would be the result of a Biden administration and Powell doing his job in bringing inflation back down. And I already talked about that. I think that's a huge double whammy because you're basically saying that, like, it's ready to cut. We're good. It's like, okay, well then they obviously have done a good job, but you're simultaneously saying that he does a bad job. And I'm like, that doesn't make any sense. And on the other hand, if the numbers come in and they're good and he's hired somebody new, he'll say, well, I told you, the previous group, man, they were messed up. Now we got the scam artists out of there. But he just said, and there'll be articles from Democrats or whoever, he just said that you can't trust them. You can't trust these numbers. So there'll be all these articles saying, well, you can't trust the bad numbers, but now you can trust the good numbers, question mark. Which is, of course, the problem of the pot calling the kettle black, because you can't simultaneously say don't trust numbers in the government and then also say but trust numbers in the government when I give them to you. Well, yeah, you can. Because he speaks the truth. He never lies. I don't know a single person in existence who doesn't lie, ever. I've known people who are extremely honest, and even they have lied at different times in their life. It's so boring now. Like, it's so obvious what's going to be next, you know, in some ways. Like, the craziness is always going to be consistently crazy. The Epstein thing is really throwing him off. I don't know if the tariffs are to blame or not. I have no idea. I can't confirm or deny that. What I do know is that like he may not be wrong about tariffs in the long run. I don't know. What we do know is that statistics have shown that they tend to bring inflation up. What we also know is that right now he's not allowing for economists to do their job. You know, this is the president that said he wants the smartest people in the room to do the job. And so he hires Elon Musk to gut the government because he says this guy is super smart. And then he later says this guy is not smart, right? Why he's cutting the legs out of EV, you know, tax credits. You know, it's very cutthroat businessy like model. Like, you give me what you give me until I don't like it, and then I'm done with you. It's very similar to probably how he runs a lot of his businesses, and I don't doubt that. That's a lot of business mentality is like, it's all about what do I get, quid pro quo. And I get that. I do. It's not all inherently evil. I don't believe that either. A lot of people just see the world as a series of exchanges, and I understand that. I don't always agree with it, but I understand it. But this idea that like his tariffs are definitely causing problems, like I can't answer that. I don't think I could say, yeah, they're definitely the problem. I do think you could say that he's undermined economists time and time again, and he's already said that data can't be trusted. So the problem with that is that you can't, and a lot of his voter base is finding this out with the Epstein stuff, aren't they? Because, and if you're one of those people, like, good on you for being consistent, right? If you're somebody that said, I want to see the Epstein files released, and that's like 60 to 70% of Americans by poll numbers, and yet you're seeing this contradiction of like, well, he might be in it, and all of a sudden, after that, he might be in it kind of stuff comes out, now we're not releasing them. Well, that's a problem. That's you like using critical thinking to say like, well, that's an issue. That's a double standard. Now all of a sudden you don't want to peddle these theories because you might be involved. Which, by the way, I'm very doubtful he is involved. I don't even know why he would be involved. But like, he didn't know the guy that well. These rich people run in these circles. But in all likelihood, like, there's not going to be anything in there in the end. Even if there was, who knows? Maybe they redacted or something. Like, I have no idea. The point is about I'm going to peddle this theory until it doesn't suit my needs anymore and suit my agenda. And that's a problem, right? And that's what's going to happen with these numbers. I'm going to peddle these theories and tell everybody before anything else happens, before anybody can react, I'm going to say it's fake news. I'm going to say it's not real. Because that immediately makes all of the people that would have normally looked at the data and been like, okay, this is just data, now see it as a political agenda. Oh, this is not just data. This is somebody's political agenda. Okay. Well, first of all, bias is bias. Like, everybody comes from their own way of living. They all believe different things. Everybody's got bias. It's inherent. But math is not supposed to be that way. Neither is that's the whole reason why the Federal Reserve is supposed to be separate from politics and all this other stuff. But as soon as you imply that it's not separate and that there's agendas, now you cast doubt on everything that comes out, which means that you have to go to that person. Hence why this manipulation technique is also partially grooming, because you have to now go to that person that's groomed you to believe only what they want you to believe. You have to go to them for the truth. It's wrong. That's not a good way to live life. Beholden to somebody else's version of the truth and letting them tell you, and they're the only one that can tell you, right? We're not talking about a religious belief here, right? We're not talking about your belief in a higher power or something. We're talking about literally like a human being who poops and sleeps just like you do. That person has the ability to control what your reality is, what you believe is or is not real, is messed up. That's gaslighting. That's the danger of it. That's what it really means. People use it in the wrong way all the time, but it's this idea of like control. Now you're in control. If I tell you that you can't trust anything, then you have to come to me to figure out what you can trust. I just got to rely on, whoever it is. They got to tell me, because I can't trust any of these people. You can't trust anybody in this government except for that one person. You know what's strange, I think, is if that were happening in any other area of life and you went and you saw somebody as like a counselor or something, and they started revealing this to you, I think you would be really hurt and you'd be really upset, and you'd also feel used and probably like, I don't want this to happen to me anymore. In any other facet of life, you would be very like reasonable and be like, wow, that's not good. That's a bad relationship. That's not good. This happens in like homes. This is like a real thing. Like people do this to each other actually more than you might think. And it happens quite a bit, right? And it's not healthy. It's not good. But our president, in he's just doing it like all the time now. And here's what bothers me about that is that if he were doing that, if he were not doing that, then all you'd have to look at would be the work itself. The work itself, the data itself, and time. That's it. The work itself, the data itself, and time, in the case of something like this, would show you whether those policies are actually effective or not. But because you cast doubt, you can't trust any of it. So instead, you're just going to blindly have to just believe when the president says the economy's great. Well, I don't trust this data, but I trust that guy, so I guess the economy's great. That's not a good place to be. He might be telling the truth about some things, like he could be, but I can't know now because you've thrown such a wrench into the world of data that apparently I can't trust any of it. That's why, like, even Republicans were going right after that, being like, that's not a good idea because you're basically now, like, losing everybody's trust. Now, how are they going to believe anything we say? You just can't. It's already been going on for a long time. This is old news, but like the thing is like I totally understand why somebody would elect. I genuinely do. Like on the policy platform, right? I do understand how someone could see Trump's policies and be like, I like the policies. I like the ideas. Totally could understand that. When someone approaches me about that kind of stuff, I tend to be more reasonable. Like I'll be like, okay, let's talk about the policies. Are they going to work? Are they not going to work? What is he trying to do? Is that going to be effective? We can just debate those things. That's like any politician policy. That's what I'm saying. That's the fruit of the work, the fruit of the labor. I get that. I can deal with that. I can. I can even respect that to some degree. Like I know people who voted for him, like friends even. I don't, I can respect that in that sense and like have a conversation about it. Why did you do that? What are the policies that you're looking at? What I can't do is I can't deal with the people that tell me that he's going to change the world order and he's draining the swamp and he's making us go back to the 1950s when everybody had jobs and the world was great. Yeah, the baby boomers had a really good generation to grow up in. Nobody doubts that. Now they're blaming all the new people, even though the new people haven't been around that long, right? It's like, come on, man. Because like, whoa, Booksy just went ageist on us. Sorry. Those are personal opinions. They may make you dislike me. I don't have anything against, in general, that population. My parents are of that generation. But like, I can't, like if you screw up, you screw up, just like take responsibility for things. And some of them I genuinely think are, trying to like right the ship. But then like others are just off the rails, like this illusion, illusion that they didn't have any contributing factors. All these other people. And I'm like, you were there for that. What are you talking about? Like you were a voter at that time. You're the one that created these jobs or created these situations, There's not a lot of like 30 to 40-year-old CEOs out there running these big companies that are doing stuff overseas. Like, it's the people who are like 50 to 70, you know what I mean? Like, that started that globalization. I just don't understand that. So it's very strange to me. Anyways, I'll stop. I said I was going to stop. I'm going to stop. Plus, we're way off topic here. And, yeah, we're not really accomplishing anything by just spouting nonsense or whatever we're doing. So it's a rocking chair activity. I will say that I genuinely don't feel like anger or any kind of resentment. I don't personally, but some people do, I guess, towards folks that may have different political views. But I'm also very middle of the aisle, so that helps. I mean, I tend to agree and disagree with different points. I don't know about this data stuff that came out last Friday. I don't feel like that's good for anybody. I disagree with that. So, and I don't know how you could agree with it. I think it'd be really, really tough for me to see somebody like being like, yep. I'm like, how? I guess it's possible, but anyways. Sorry about that if you're like really annoyed. You're like, man, I just came here for stocks, dude. You need to just go. Yeah, I know. I do. Thanks for that, though. There was something else, but I guess for now, let's just leave it alone. We'll readdress it maybe tomorrow. I kind of wanted to poll people on some things, but we'll do it when we have like a peak number, which is usually like 30 to 40 anyways. But I wanted to see about some stuff with the channel. That's not going to happen right this second. Anyways, you guys have a great afternoon. We'll talk to you later.